Headlines. The S&P 500 finishes one of its best first halves in over 20 years, but Asian stocks slipped this morning as virus concerns sap sentiment. The Fed's Kaplan reiterates tapering should start sooner rather than later. OPEC Plus heads into a crucial meeting with Russia and Saudi Arabia split on supply hikes. Markets expect an extra 500,000 barrels a day from August. And the UK's Rishi Sunak promises to sharpen the City of London's competitive edge for decades to come. We speak exclusively to the Chancellor of the Exchequer at 10:30 a.m. London time. Good morning, everybody. Just 10 seconds to go then until the start of Thursday's cash equity session. And this is the picture for European equity market futures this hour, pointing to the upside, and increasingly so over the last hour. Things seem to have improved a lot, not necessarily taking that lead from the US, which is maybe interesting, where we see a fairly flat futures picture. But we did see heavy selling here in Europe yesterday, and so maybe we're just clawing back a little bit of what we lost, but not all of it. So we do see European equity markets then just jumping out of the gates as the last day of the first half was not great for European equity markets, but the first half in general was not bad for European equity markets. The Stoxx 600 clocking up 5 straight months of gains. The S&P in the US had one of its best first halves since 1998, and so we see European equity markets jumping out of the gates this morning. The first trading day of the second half, up 0.7% on the FTSE 100, up 0.7% also on the CAC 40. So we're seeing some decent gains here across European equity markets. Markets start the second half of the year facing challenges from COVID-19 variants and the prospect of diminishing monetary policy support amid inflation pressures. Joining us now then is Bob Parker, Quilvest Wealth Management Investment Committee member and regular guest on this programme. Bob, really good to speak to you once again. So as we start our trading for the second half of the year, can't quite believe we've got to the second half of the year quite so quickly. What is your expectation for the second half? We've made solid gains in risk assets, thinking of stocks at least, across the Atlantic in the first half. Does that continue into the second half?
I think broadly, yes. If we start with the positives, economic growth numbers, I think in the second half of the year are going to remain very strong indeed. And although the US economy, although growth in the US probably peaked in the second quarter, the moderation in growth for the second half of the year, I think is going to be minor. And one would reiterate the Fed forecast for growth for the year as a whole at 7%. Europe, I think we're going to, despite sort of the recent concerns about the Delta variant of COVID, I think the third quarter will see an acceleration in growth, and for the Eurozone, quarter-on-quarter growth for the third quarter could be as high as 3%, so annualized over 12%. Japan had a slowdown in the second quarter, but as the Olympics go ahead, and I think we're going to have some catch-up effect, I think you're going to be surprised by an acceleration in Japanese growth. And although the Chinese economy is moderating, it's still going to achieve this year 6% plus growth. So that's the first positive, good growth numbers. I think the second sort of positive is that corporate earnings numbers are going to remain very strong. And if we just look at guidance for corporate earnings over the next year, it's going to be sort of 30%, close to 30% in the Eurozone, similar number in the UK, and sort of close to 25% in the US and Japan, and only slightly under 20% in China. I think a third positive, obviously, is what are investors going to do with the major market challenge at the moment, which is negative real yields in virtually all fixed income markets. And, that's partly driven by the rise that we've had in inflation. But, fixed income markets are looking very unattractive relative to other asset classes.
Okay, and so do you see anything that changes that then, Bob? Thinking about negative real yields and all the drivers and all the inputs that go into that, is there anything that turns that around in the second half?
Well, the answer is, what are central banks going to do about the rise in inflation? And, the guidance from central banks at the moment, and it's very coordinated. You're getting a very similar message from, the ECB and the Fed and from People's Bank of China and the Bank of Japan, which is that the rise in inflation, yes, it's been more than they originally expected, but they are sticking very much to the view that the rise in inflation is going to be temporary. I think we are going to get some ugly inflation numbers over the next 2 to 3 months. Eurozone inflation easily above 2.5% year on year. The next US inflation number, could be greater than the 5% we saw last month. I think later in the year we will see some of the effects, whether it's supply chain disruption, labor market disruption, some stabilization in commodity prices. I think inflation will come down, but I think central banks may be disappointed that inflation doesn't come down as quickly as they are expecting. So in that context, my view is unchanged, which is that we will see the Fed cautiously start to taper in the fourth quarter of this year, starting off with reducing MBS purchases. And likewise, you may be surprised by the ECB doing a similar thing.
Okay, and that comment on MBS takes me nicely into my next question, Bob, about bubbles and whether you see any out there. I was looking at this chart provided by a colleague, house prices year on year in the United States, and you put that up against Federal Reserve balance sheet, and just because they move at the same time doesn't suggest one causes the other, but it does make you wonder about bubbles, and it does make you wonder what happens to house prices when we start to see a taper of some kind from the Federal Reserve. Are you concerned about the US housing market?
It's not just the US. If you look at a number of countries, and here in the UK, we've got a very similar position. And in the UK, obviously, it's partly driven by tax relief, which, by the way, is ending on house purchases. And US house prices, coming back to your graph, are driven by the rise in inflation. There is clearly a move by investors into real assets, with real estate being a beneficiary of that capital flow. And obviously there is a correlation between central bank liquidity injections and the asset prices. And if we look at the Fed balance sheet, a year and a half ago, the Fed balance sheet was around $4 trillion US. It's now over $8 trillion US. So if we get tapering, and my view is we will get tapering, but it's going to be a very slow, cautious process because all central banks are desperately anxious to avoid a taper tantrum. But clearly that takes some of the fire out of the real estate market, not just in the States, but probably worldwide.
And thinking about that tantrum and trying to avoid a taper tantrum then, Bob, we heard from Kaplan at the Fed, who thinks we will be able to avoid a 2013 style taper tantrum because he says the market knows that the Fed is discussing this, it's part of the conversation, it's happening to some extent, happening in public as well. So does that help? Does that mean that we avoid some kind of taper tantrum? I suppose some tightening of financial conditions is bound to have some effect. I mean, that would be the intention. So how will we manage that?
Well, I think the first point to make is that a number of central banks are already reducing liquidity or raising interest rates. So, if we look at the Bank of Canada and the Bank of England, their weekly quantitative easing purchases are being reduced. If we look at Bank of Japan, they no longer have a policy of intervening and purchasing in the Japanese equity market via ETFs. If you look at the balance sheet of the People's Bank of China over the last 5 months, it's actually broadly flat. So, there already we're starting to see some tightening in liquidity conditions. A number of emerging market central banks obviously are raising interest rates already, such as Brazil, such as Russia. South Africa has given very strong guidance that interest rates will rise probably twice by the end of the year. So I think the overall picture is one of gradual tightening in monetary policy by all central banks. Now, in the case of the Fed, they're running at 120 billion a month at the moment in terms of QE. I think that could come down to potentially 90 to 100 billion during the fourth quarter. And then in the first half of next year, I wouldn't be at all surprised if they take it down well below 50 billion a month. And if you get growth next year of 4% plus in the States, if inflation stays close to 2.5% to 3% above their target, arguably the need for QE just doesn't exist.
Okay, Bob, thanks so much for your time. Good to speak to you. Bob Parker, Quilvest Wealth Management Investment Committee member. Thanks very much for coming to talk to us here on the European Market Open. We should tell you that Christine Lagarde is speaking. ECB President Christine Lagarde is speaking. She's taking questions from MEPs on the EU Parliament Committee for Economic and Monetary Affairs. She's giving some opening remarks, we understand at the moment, live from Brussels, as you see there. She's speaking as chair of the European Systemic Risk Board, so we may get questions of that nature. We'll keep across any comments she makes. She said that restrictions on dividends could lapse in September. Keep an eye on Eurozone bank shares with that in mind then. Coming up on this programme, the UK's Rishi Sunak promises to sharpen the City of London's competitive edge for decades to come. We speak exclusively to the Chancellor of the Exchequer at 10:30 a.m. London time. We'll get analysis of what messaging and what soundings he's been taking from the city. We'll get some analysis of that shortly as well. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open. 12 minutes into our European trading session. European equity markets are surprisingly positive perhaps this morning, or at least more positive than maybe the futures picture overnight had indicated. We did see heavy selling yesterday, so we're making up for a little bit of that by recouping some of those earlier losses. Let's get to some of the stocks that are on the move then this morning. And we've got for you AB Foods. That's one of them. You can see that stock up by 3.25%. They've improved their guidance, increased their guidance, in particular surrounding the Primark part of their business. H&M also in focus right now. The second quarter EBIT miss may put pressure on shares. This was according to Morgan Stanley. So even though the numbers at the pre-tax level came in better than anticipated, perhaps that is why we're seeing a bit of a downside move in that business, down by 3.9% now in trading. And Sodexo, the catering business based in Paris, of course, up by nearly 5%. This is the biggest gainer on the stock 600 this morning. The Q3 sales numbers for that business beating estimates. Now let's focus on the UK. The Chancellor of the Exchequer, Rishi Sunak, will promise to bolster the finance industry's competitive edge for decades to come. This as part of his Mansion House speech on the state of the UK economy that he'll be delivering a little bit later on today. Joining us now with analysis for more is Tom Metcalf from our finance team, who's been looking at the details. Tom, very good morning to you. So what do we know about the proposals that Sunak is going to outline today?
Yeah, well, so far they've been pretty thin on details. So he came out with this statement overnight basically saying, look, we're going to really try and sharpen the competitive edge of the City of London. What does that mean? He said words like technology, green finance. But beyond that, I think we're all waiting for his speech, and I'm also be interested to see his interview later on the show. Yeah, absolutely, yes. So I'm going to be speaking to him a little bit later on about what that really means then, sharpening financial services for decades to come. He's also, it's being reported overnight that he's making some progress in persuading other members of the OECD or G7 to allow him an exemption for financial services on the global tax deal. Is that something we've heard about? Yeah, so they're sort of painting it as a big win for Sunak, who apparently has sort of rattled the saber and told other world leaders we really need to protect our finance sector. I mean, I think there's a lot of rhetoric here. For a lot of people saying, look, the finance sector was always going to be exempt from this. There's various reasons why it's basically paying the level of tax that this tax deal is trying to obtain already. So, but it's interesting. There's definitely a sense that the UK and Sunak in particular is very much bolstering the finance sector, or at least trying to present that case. Yes, this is a bit of a pivot from the period where the Brexit negotiations were front of everybody's mind, and financial services didn't seem to be at the front of anybody's mind, not those in Westminster anyway. Yeah, no, definitely. It's a complete reversal from what I remember. I mean, even sort of late last year, where you had the finance sector basically going, please listen to us. Brexit is not great news for us, but now every sort of announcement coming out of Sunak, every announcement coming out of the Treasury seems to be very much, the finance sector is key for the UK, and we're going to do everything we can to boost it. Tom, thanks very much. Thanks for bringing us the story. Tom Metcalf from our finance team. And as Tom mentioned, I'll be speaking to Rishi Sunak, the Chancellor of the Exchequer, at 10:30 a.m. London time. You can see that interview then. Let's get a Bloomberg Business Flash for you. The top corporate stories that we're covering this morning. Here's Laura Wright.
Thanks, Anna. The family office of billionaire George Soros is said to have started trading Bitcoin as some of the biggest names in the hedge fund industry wade deeper into digital assets. According to TheStreet.com, Steve Cohen's Point72 Asset Management is also seeking to hire a head of cryptocurrencies. Italy's UniCredit says it will allow non-branch staff to work from home 2 days a week once post-pandemic work arrangements are put in place. Bank branch staff will be able to choose to work 1 day a week. The final arrangements will depend on how the pandemic evolves. Sources tell us Barclays is hiking junior banker pay, joining Wall Street rivals in digging deep to retain staff amid high levels of burnout. We're told base salaries for all U.S. analysts will increase by $15,000 to a $100,000 base, while U.S. associates and vice presidents get a $25,000 boost. Staff outside the U.S. will get equivalent percentage raises. That's the Bloomberg Business Flash. Anna.
Thanks very much. Laura Wright here in London. Coming up on this program then, this time will be different. Dallas Fed President Robert Kaplan says the central bank will avoid a 2013-style taper tantrum this time around. That exclusive conversation next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Almost 100 million barrels of it will be pumped each and every day this year, then shipped to refineries for processing. But then what? What exactly comes from a barrel of crude? Exact amounts vary, but more than 40% of a typical U.S. barrel is refined into gasoline, far and away the largest product. Next, distillates. Think diesel. That's fuel for trucks and trains and heating oil for our homes. About 10% is turned into kerosene and jet fuel. Well, of course, jets, but also portable heaters and cooking stoves. Then there's residual fuel, the heavy stuff, for ocean liners, power plants, and industrial boilers. But that's just 2% of a barrel. That still leaves about a fifth. Crude from these parts makes everything from propane, naphtha, and asphalt to ingredients for plastics and chemicals. So as the world contemplates a greener future, the challenge will be doing it without the fuel that powers so much of our lives today.
A look there at exactly what comes out of a barrel of crude, and that is topical, of course, because it is a day when we're seeing a meeting of OPEC Plus, and they'll decide on whether to increase production of oil. We're 20 minutes into our European trading day, and oil prices moving to the upside, up by 0.6% on WTI, 0.5% higher at $75 a barrel on Brent. Now, the Dallas Fed President Robert Kaplan says scaling back the central bank's asset purchases should be done gradually, while reiterating that it would be prudent to begin the process sooner rather than later.
There are parts of this price surge that'll moderate used cars prices, lumber prices, but they're also, what we're seeing in our work is we're seeing a broadening of price pressures that are rippling into a broader range of items. Semiconductor shortages first affected used cars. Now they're starting to affect more broadly consumer products. Having said that, our PCE forecast for this year, for year-end, is 3.5%, but we think that'll moderate somewhat to somewhere in the neighborhood of 2.4% next year. But that 2.4% next year won't be impacted by extreme number of high items. It'll be price pressures on a much broader range of items. So the only comment I've made is I don't want to label, but I'd like to manage the risk because there is uncertainty and upside risk.
Well, there's uncertainty, and a lot of the inflation that we're seeing was predicted by members of the Fed and the Open Market Committee. So how long is it going to take you to have actual concrete numbers that aren't based on just reopening to know whether you're right or wrong about inflation?
I think this is going to be a dynamic picture, which is I don't actually think there's a date at which this is going to become all of a sudden clear. And the reason I say that, again, I'm hearing from my contacts, some of these pressures are due to reopening. We'll see evidence of that, I would guess, through the fall. But some of them, they tell me, are more persistent, have to do with other secular trends, long-lasting supply-demand imbalances, and those may take longer to resolve.
You've warned we could see imbalances, we could see excesses in financial markets if you wait too long. How long is too long? When do you need to, if the market consensus is the end of the year, is that about when you should start tapering, or has it got to be sooner?
I would prefer sooner, and I've said the words deliberately vague, sooner rather than later. In the FOMC meeting, I'm very more specific about timing. We still have to continue to make progress, clear that we've weathered the virus, which I think we have, but I think it'll be far healthier to start soon and sooner rather than later. Why? Excess risk-taking, excesses in the housing market, and excesses and imbalances in the overall economy. And I do believe if we take our foot off the accelerator gently now, we'll have more flexibility down the road to avoid more abrupt action or severe actions in the future. I really believe that.
Well, you've said to the markets we're going to give you a long runway before we announce this. If you move it up, does that shorten that runway, and is the Fed a bit of a prisoner of a taper tantrum fear?
I think the aftermath of this downturn is very different than the aftermath of the Great Recession. 2013, we learned a number of lessons. On the other hand, I think today, I think our adjustment in purchases is likely to go much better. One of the reasons why I've been out there talking about adjusting purchases is I wanted to get out into the market. And I think this debate we're having at the FOMC, some of it publicly, is good, that people are on notice that these adjustments are coming. The only question is when. But I think we'll be far healthier sooner rather than later to begin.
That was the Federal Reserve Bank of Dallas President Robert Kaplan. Sooner rather than later is his clear message. Interesting to see him thinking differently this time versus 2013. There won't be a taper tantrum, he says, because of the conversations that are taking place in public about when that taper should come. He says it's being now fully expected by the market. The question is the timing. I should also tell you, speaking of central bankers, that the ECB President Christine Lagarde is speaking. She's taking questions from MEPs. So this is somebody who's asking her a question. She is there, though. She's taking these questions at the EU Parliament Committee for Economic and Monetary Affairs. You can follow that live on Live Go if you're on your Bloomberg terminal. Some of the lines she's given us so far. She's speaking, of course, as chair of the European Systemic Risk Board. So there you see her. That's what a lot of the questions may focus on. She says that restrictions on dividends could lapse in September, which is interesting for European banks. The euro area recovery faces uncertainty from mutations. Their reference perhaps to the Delta variant, and banks must fully reflect credit risk and provision early. So some of the sort of risk-based messages she's giving at the moment. Let's get back to the markets then and look at some movers 25 minutes into our trading session. A focus on airlines today. We have these EU passports, COVID passports coming into effect. Our colleague luckily for her, in Madrid, Maria Tadeo, told us all about that a little bit earlier on. We are seeing some positivity for some of these stocks, although generally speaking, we saw heavy selling of European equities yesterday at the half-year end. And today we're seeing some quite widespread buying. Some of the beaten-up names in the aviation space, though, doing pretty well today. Travel and leisure, the biggest gainer at the start of trade. We have IAG and EasyJet both trading higher. Ryanair up by 2.7%. And I'm going to be speaking with the Ryanair CEO, Michael O'Leary, about the EU's digital COVID passports and what it means for international travel. That conversation coming up right here next. This is Bloomberg.
excluded from the workplace, especially when you've got skills and motivation and things to give, can have a really detrimental effect on people's well-being. They can become isolated, of course have the financial stress of not being able to support themselves. That might be their first entry into the broader community where you're building relationships with workmates, and so that's your exposure to culture and you're starting to feel like you belong.
Some people might need to practice their English more, they might just need just some practical experience in an Australian kitchen.
I have not from Australian friend now, but in the kitchen I have many friends.
Is Jobs Day on Bloomberg Television. May's jobs report fell short.
I'm going to call it a modest disappointment 2 months in a row.
Will this month's hit the mark? The June Jobs Report, Friday morning on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. We are just half an hour into our European equity trading session. European equity markets making decent gains, rebounding from losses of yesterday. Quickly, just want to mention what's going on over in Sweden. The Swedish Riksbank leaving its key rate unchanged at 0%. So as was widely anticipated, no change in interest rates. I'm told by our friends in Bloomberg Economics, though, there are questions over whether he might hint at future plans to increase rates. This is, of course, talking about the central bank governor later on today. So we will certainly watch out for that. The commentary coming through right now, the rate is expected to remain at 0 for the forecast period. So I guess that's the answer to that question. So not during this forecast period. Perhaps this central bank mindful of what were perceived as mistakes post 2008 and post the great financial crisis, where some suggest that this bank went a little bit early in its rate hikes. So not wanting to do that again. We'll keep across those lines coming through. Now let's get back to the travel sector. The EU's COVID-19 vaccine certificates go live today. They aim to help citizens travel freely throughout the 27-member bloc, even as the more infectious Delta variant threatens the global recovery. But for Europe's biggest airlines, is it too late to save the summer season? Let's get into that conversation right now. Joining us, I'm pleased to say, is the Ryanair CEO, Michael O'Leary. Good to speak to you then, Michael. So today, exciting day, EU digital COVID certificates, they go live. How excited are you about that?
And good morning to you and your viewers. We're very excited. I'm here in Brussels this morning where we're holding a press conference announcing 4 new routes later today. I'm pleased to say the digital COVID certs have started this morning. They've worked very well. 23 of the EU countries have been issuing these certs for the last 2 weeks. There's 1 or 2 countries, most notably Ireland, who still haven't issued the certs, and so there's still some problems there. But we're seeing a very strong recovery in bookings of the intra-European piece. German leisure, Benelux leisure, Scandinavian leisure, heading to the beaches of Portugal, Spain, Greece and Italy. And we expect that to continue through July and August, which should make for a reasonable recovery in the last 2 months of the summer peak.
Is this going to be something that will enable you to increase capacity then across the intra-European, the intra-EU parts of your network?
Yeah, absolutely. I mean, we're probably doubling our capacity into the month of July and August. We carried about 1.7 million passengers in May. We expect that we've just done just over 5 million passengers in June, and we're very hopeful. I think we'll get probably somewhere between 8-9 million passengers in July. So the business is recovering very strongly. The 2 markets that are lagging that are clearly the UK and Ireland, where still there are travel restrictions, COVID restrictions still in place, and in my view, people overreacting to what the Delta variant, which has seen an upward spike in cases in the UK, but not any significant move in serious illnesses, hospitalizations or morbidity.
And let me talk about the UK then with you a little bit, Michael. We saw recently Spain's Balearic Islands and Malta, they were recently added to the quarantine-free green list. Do you have any sense of when we're going to get the next review, when we will see further countries added to that green list, if we do?
Now, I mean, our sense of it is that there'll be more countries added around the 19th of July. That seems to be the latest date for the UK government to move, that the final restrictions will be removed at that stage. The bit that's uncertain yet is how will the European countries, are they going to welcome in UK visitors without any restrictions, or are they going to require, the NHS, will they accept the NHS app, or will they have to produce other documentary evidence that they have been vaccinated? But, the UK is a country where 60% of the adult population has now been fully vaccinated. We see that as enough to allow the UK to families go on holidays in Europe, but the Europeans need to kind of reciprocate. In our view, the best thing would be to join the EU digital COVID cert with the NHS app in the UK, and therefore you'd have seamless travel. But that's a political issue, not a travel issue.
If we did see the decision made in the UK that those who are double vaccinated would not have to quarantine, what kind of impact would you say that would have on demand for flights, Michael?
I think we will see a very strong recovery into late July and through August during the remainder of the school holidays in the UK. I think you'll see a very strong recovery in flights. We would certainly be able to put more capacity into the UK market. At the moment, we're taking capacity away from the UK and from Ireland so that we can cater to really very strong structural recovery in demand in Germany, Benelux, Scandinavia, Spain, Italy, all over the rest of continental Europe.
You referenced this a little earlier, but do you anticipate then that Europe will remain a bit cautious on its acceptance of UK visitors, because the UK, leaving the UK and getting back into the UK is one side of it, so being allowed into a European country is another. So what are you anticipating? What are you hearing? I mean, the view isn't necessarily the same in Berlin and Madrid.
That's true. I mean, I think Berlin, have reacted very badly. I mean, Mrs. Merkel's idea that you'd ban UK arrivals or UK arrivals after quarantine was nuts, given that the UK is the most heavily vaccinated country in Europe. I think you're taking very little risk welcoming in UK visitors. But in another month, or by the time we get to the end of July, vaccinations will have rolled out. A further 10, 15, 20% of European populations will have been fully vaccinated. And I think vaccinations are clearly the way out of this. What we need to do as an airline, though, is to get people back flying again. We're having a €5 seat sale today for travel in the first half of July. We're seeing very strong response. I think people have been pent up, locked up for the last 18 months. They want to get out and spend. They want to go and travel. They want to go and see friends and family again. And I think we will be the beneficiaries of that because we're the airline with the most pan-European flights and connections in Europe.
And you say that vaccinations are the answer, Michael, which many in the travel industry and many people will hope for. Do you think PCR tests, though, are going to be part of the answer for quite a while? I mean, certainly for children around the summertime here in Europe, maybe that is the answer. Do you think that's just going to be something we have to get used to?
I'm not sure it's the answer. I mean, the problem with PCR testing is it's expensive. I mean, if you're a family with, 3 or 4 children going on holidays, getting 3 or 4 PCR tests is quite expensive. I think we need to have a more rational approach to families traveling with children. If the parents are fully vaccinated and the children are under 18, frankly, they represent no risk of they may catch COVID, but they're generally asymptomatic. The youngsters are not going to suffer serious illness or hospitalizations, and the risk of their spreading it to an adult population that will be almost fully vaccinated by the end of July is negligible. So we need a more common sense approach to this. Common sense has been sadly lacking in a lot of this in the last 18 months, but we see vaccinations as the way forward, and once we get to 70-80% of the adult population fully vaccinated, really there should be no restrictions on movement, whether that's domestically in pubs or restaurants or hotels, or on short-haul flights within Europe. I would extend that to flights within Europe. I think longer-haul flights will be a much more challenging situation, but that doesn't affect us because we don't fly long-haul.
What's the pricing situation at the moment, Michael? You've faced increasing costs from various factors. The levels of demand must ebb and flow with policy changes quite abruptly, and yet you have families trying to cover the costs of extra testing as well as the cost of the flight. So what flexibility do you have on pricing?
Huge. I mean, look, our focus this summer is not on pricing. Normally we'd be 50, 60, 70% pre-booked for July and August. Today, I think we've about 50% of the seats sold for July, about 30% for August. So the pricing has never been cheaper. As I said, a €5 seat sale today for travel in the first half of July. Airlines have not got the forward bookings they would normally have at this time of the year, and therefore consumers will be the beneficiaries of, you know, our policy of pilot high, sell it cheap, get people back flying, restore confidence in air travel, particularly within the European Union, and we worry about pricing and fares later.
Tell me about staffing, finally, Michael, at Ryanair, whether you've got staff on furlough in the UK, what the situation is broadly across Europe, and whether you're experiencing actually any difficulties in hiring. We see that story for certain industries in the UK.
Yeah, no, I mean, like fortunately, I think we made the decision through the crisis to keep the pilots, the cabin crew current. We did benefit from the furlough schemes in the UK and around Europe. We're bringing most of our people now back online. The UK and Ireland, as I said, is lagging behind because of these restrictions in Ireland. You know, they're completely mismanaging the reopening. We're the laughing stock of Europe in Ireland, but, you know, it's a small market for us. Staff are coming back. We've kept them current. We've kept the aircraft current so we can recover very quickly. And because, I mean, we're a reasonably high-pay airline, our cabin crew are earning between 30 and 40,000 a year. We see an awful lot of applications coming to us from youngsters who've lost jobs in retail, lost jobs in tourism and leisure, coming to us because of we're offering higher paid jobs for cabin crew and pilots. There's a huge oversupply of pilots in the market, and that will continue, I think, for a number of years due to the collapse of a number of other airlines during the COVID crisis.
Michael, thanks for your thoughts this morning. Good to speak to you. Michael O'Leary, the CEO.
Thanks, Anna. Very good to speak to you.
Nice to speak to you too. Now, coming up on this programme, held back by mediocre male managers, we discuss a report that finds women in financial services aren't getting ahead because of double standards. We speak to Grace Lordan from the London School of Economics, who led the research. What's the data that's gone into this assessment? We'll get the backstory. That's next. This is Bloomberg.
Surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data. How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Welcome back to the European Market Open. 43 minutes into our trading session that is proving very positive. The first trading day of the second half of 2021. We made it to July. And we see European equity markets very much on the front foot, up by more than 1% on all of the major markets. Let's step away from the immediate market themes and think about some geopolitics for a moment, as we have live pictures coming to us from Hong Kong. Protesters are gathering at Causeway Bay. It is the 24th anniversary of Hong Kong's handover to China. As a result, you see media heavily in attendance, police heavily in attendance. We understand the city deployed some 10,000 police officers to try to discourage any protests today. It is the 100th anniversary of the Chinese Communist Party as well, so another reason why we might be seeing people gathering. The police warned people that they risked arrest by participating in unauthorized assemblies, so we'll just keep across those pictures for you as they develop. Let's turn our focus, though, to equality. And according to some new research, mediocre male managers are holding women back across financial services. This is according to a report by the London School of Economics and Women in Banking and Finance. Women are being held to a higher standard of work, the report argues, with average performing men more likely to stay in the sector because they fit the social norm of what a worker in the industry looks like. Joining us now is Grace Lordan, Director of the Inclusion Initiative at the London School of Economics. Grace, really nice to have you with me on the programme. So tell us about the research. Interesting headlines, interesting conclusions, but how on earth do you gather evidence, gather data that tells that story?
Well, first, Anna, thank you for having me on today. I really appreciate it. So this study is part of a 4-year program with Women Banking and Finance. And in the first part of the study, which happened earlier last year, the Wisdom Council conducted a survey of 2,000 men and women in financial and professional services. And what was striking and what came really through in that quantitative survey was the differences between the norms in how men and women are perceived within financial services. The second thing that was really striking was the differences that came through were really dependent on function. So we saw very different perceptions for women who were working in areas that had high shares of men versus lower shares of men. So as a second part of that study, we did a qualitative report, which I led this year. We recruited 44 women, 11 black women. We intentionally focused on areas that had high shares of men. So we had, participants from the trading floor, we had participants who were investment bankers. And then secondly, we actually looked at people who were coming from communications and compliance. And the idea that we had was to try to think about themes that were holding both of those functions back, with the idea that we might be able to generalize from financial services. This qualitative piece of research is quite special, Anna, because rather than me recruiting the women, which typically happens, they were recruited by 3 London recruiters that all specialize in very, very different areas. So we do think that we've kind of circumvented the selection problem. And what came through in that research really was the importance of the role of the manager. So if you were lucky enough to have a good manager and got opportunities to shine, you would have this accelerated progression. And if you ended up with a manager that ended up being called in the media the mediocre manager, then that sexy headline really has detrimental impacts for the women that they manage.
Okay, and what you also talk about is that there are still people who recruit people who are just like them, and that's one of the issues that financial services still faces. And I just wonder, has the message still not got through that post financial crisis, there was plenty of talk in financial services about too much groupthink, about a lack of diverse views, diverse in a very broad sense, diverse views from all kinds of different people, and maybe certain decisions would not have been made if there were different voices at top tables. Has that message still not got through then, Grace?
So I think the first thing to say is I think financial services are probably leading the pack in this conversation compared to other industries. So, cronyism isn't unique to financial services. And I think what is unique to financial services is the companies that have come together to sponsor this research. But yes, I think one of the things that was relayed by the women over and over and again in their interviews was it wasn't sexism, it wasn't hatred, it wasn't discrimination. It was essentially cronyism. So people were giving preferences to people like them for opportunities, for promotions, for pay grades. I think that there's data that came through in last week that essentially said that 30% of more senior positions are these kind of onward referrals that are people that are in your networks. So it's also backed up by that data. And I do think this is where the industry is losing. If we're always only hiring in our networks and our networks aren't defined by competence, then we're not giving the industry a chance to innovate, create, and to bring in, as you say, people who actually will circumvent groupthink.
One of the other points that your research makes is that you found evidence that some managers had a tendency to fake empathy. What role does that play, Grace?
So, and I'm an economist, and we always think about where there's an incentive, people might actually game it. And even I was surprised by this result that, the women who I met, and I met 44 women one-on-one and 35 women in round tables. And the women who I met spoke about managers who essentially ran on a platform of diversity and inclusion, spoke about the idea that they were trying to hire people different to themselves, spoke about the idea that they wanted to circumvent groupthink and advance women. But when push came to shove for those big opportunities, they didn't necessarily walk the talk. And this worries me, because I think, as we go into the fourth industrial revolution, all of the data points to authentic managers, empathetic managers being the ones who will get the higher wage premium. And if we do have individuals who are mimicking these traits already, it doesn't really bode well for the future.
Would it be interesting to get, this research obviously focused on how women viewed their career progression in these, as you say, specifically in one part of it at least, in these areas that are very male-dominated typically, and how women viewed their progression there. Would it be interesting to get male employees' views on all of this? Because I think many people would not want mediocre people to be blocking top talent from reaching the top.
Yes, so I think if we were to open up the research to include men in the qualitative stage, I'm sure that the men would also report, that they are confronted with mediocre managers. So I think the mediocre manager is a problem for the industry that's not unique to gender. The first stage of the study did include men, and we do see these differences in norms still there between men and women within the industry. And this is also backed up, by lab experiments, field experiments, correlational studies. So the fact that we still have differences in norms in 2021, and that what's holding women back is much more subtle, really makes me want to spotlight the role of the manager, and for the industry to really take seriously moving forward individuals who really do embrace diversity, not because it's socially responsible, but because it is actually good for the industry. It is good for innovation.
Grace, thanks very much. Thanks for bringing us your reports. Grace Lordan, Director of the Inclusion Initiative at the London School of Economics. 8:50 here in London. Coming up on the programme, back to the markets, and it's all quiet on the pre-payrolls front, we understand. We discuss what to expect in the markets before tomorrow's jobs figures out of the United States. Live pictures of New York. This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Markets Open. Protesters still gathering at Causeway Bay on the 24th anniversary of the Hong Kong handover to China, also the 100th year anniversary of the Chinese Communist Party. So a few reasons to watch out for tension in Hong Kong today. The police warned people that they risked arrest by participating in unauthorized assemblies. So we'll keep across these pictures. We just saw some police running up those escalators there, but we'll keep across that for you. Now, we're just 53 minutes into our European trading day, and actually the start of the second half of 2021 has started in very positive spirits for European risk assets. Stocks to the upside, FTSE 100, CAC and DAX all up by more than 1% today. Laura Cooper, Bloomberg Markets Live macro strategist, joins us. Laura, good morning. We saw a big pullback yesterday for European stocks and a big gain today. Is this all about the end of one half and the beginning of another?
Well, that certainly does appear to be the case. I mean, what we're seeing this week is cyclicals really bounced on Monday, then that was retraced yesterday, and then we're seeing kind of that come back again today. But I think what we're seeing is largely these are European equities that are trading without conviction. Over the past few weeks, they've been largely sideways. Yes, we did get some reports from ECB's Lagarde that they could potentially lift bank dividends in September, which is providing a little bit of a boost to banks this morning. But ultimately, you know, whether it's that U.S. non-farm payrolls report that could be the catalyst for markets, or whether we're going to have to wait to see more conviction in the next earnings season, really to drive European equities out of this range-bound trading.
Yeah, so we're looking ahead to the payrolls number tomorrow. We have to wait one more day for that then, Laura. Let's talk about where we are on oil prices. We've got the OPEC Plus meeting, of course, taking place today, and I know on the Markets Live blog you've been canvassing opinion on how much that could move prices. We've got oil prices up by 0.8% just this morning, 75.20 on Brent. What's your thinking?
Well, certainly we've seen quite a rebound in oil so far this year, up about 50%, and that's largely being driven by that demand recovery. So going out to Q3, we are expected to see demand continue to outstrip supply. So Bloomberg Intelligence expects a deficit of about 1 million barrels a day. That's going to put pressure on prices. So that does warrant an easing of output curbs from OPEC today. Consensus has around that 500,000 barrel mark. But again, there's kind of caution around that. We do have rising variant risks. There is the potential revival of that Iran nuclear deal, which could ultimately cap upside to prices. So I do think we are going to see some upward pressure on prices, but unlikely to be sustained anywhere near that $100 mark, because I think OPEC is going to step in. They want to tame inflation as well.
Laura, thanks very much. Laura Cooper, our Markets Live macro strategist, joining us there. We just had some PMI numbers dropping. We've had them through the last 15 minutes or so. We had the Italy number, the manufacturing PMI looked exactly in line with estimates at 62.2. The French June manufacturing PMI came in at 59, just above the 58.6 expected. And the German number coming in just ahead of estimates at 65.1, all way ahead of 50, of course, strongly into expansionary territory. Not much move on the euro that we can discern from this chart. That is it for the European Market Open Surveillance Early Edition is up next. We'll bring you our interview with Rishi Sunak, the UK Chancellor, a little bit later. This is Bloomberg.
ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
We're remembering the horrific scenes from last year. Orange skies that look like end of days.
We are sequencing the variants in order to understand the prevalence. For now, extremely low of the Delta variant.
The good news is that the mRNA technology is poised to be able to react.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 1st of July. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The S&P 500 finishes one of its best first halves over 20 years. The Fed's Kaplan bridge rates tapering should start sooner rather than later. We'll hear from our exclusive interview. Nissan says it will create a new £1 billion hub for making electric vehicles in Britain. We'll speak shortly to the Chief Operating Officer, Ashwani Gupta, from the plant in Sutherland. And the NFT craze continues. The original source code of the World Wide Web sells for $5 million, and five-time Wimbledon winner Bjorn Borg puts his 1980 victory against McEnroe up for auction. We speak to the tennis legend later. So there is quite a lot going on, bits and pieces here and there for the markets, but it's very clear that it's all about inflation. The Dallas Fed President, Robert Kaplan, says scaling back the central bank's asset purchases should be done gradually. Now, speaking exclusively to Bloomberg, he also repeated his argument that it would be prudent to begin the process soon.
I think it'll be far healthier to start soon and sooner rather than later. Why? Excess risk-taking, excesses in the housing market, and excesses and imbalances in the overall economy. And I do believe if we take our foot off the accelerator gently now, we'll have more flexibility down the road to avoid more abrupt action or severe actions in the future.
Now, the Atlanta Fed president also spoke. He said that while the U.S. has actually fully recovered from the pandemic on a GDP basis, it is going to take some time to get back on employment, with the economy being about 10 million jobs below pre-COVID trends. Well, joining us now to talk about all of this is Luke Hickmore, Aberdeen Standard Investments Director. Luke, as always, thank you so much for joining us. Now, there are a number of things that I want to talk to you about. First is what we heard from some of these Fed presidents, but also the fact that the market, at record highs certainly for the quarter, is now trying to discount or figure out what they do with the Delta variant and how, many lockdowns we could see. So is there a discount right now in the markets as they try and figure out the way forward just for the next couple of months?
Delta doesn't seem to be having the impact on markets it seems to be having on the population as a whole. It feels, another wave has been hitting us, and Australia has gone through lockdown again in Sydney, and, India's clearly going through it pretty hard too. But markets, a little bit of nervousness around the edge, but I can't say that there's any real discount in there for Delta. It's really feels like we've moved past that, and the narrative is moved into, when are the central banks going to shift, rather than how are we going to get on top of Delta. I think that's a shame. We need to get on top of it, and we need to get, vaccine passports much more used around the world, which means getting vaccines in a further number of countries than really we're seeing at the moment.
So, Luke, what exactly will be the next catalyst for the markets? I know we're expecting U.S. non-farm payrolls tomorrow. Are we going to see a bit of doldrums today, and then on to exactly what we hear from the Fed and when we could see some tapering, or at least some certain talk about tapering?
It's really hard to see how the market breaks out of its dead quiet at the moment. And it really feels we've been there, doesn't it, for a good month or so now, that there's really not a lot of volatility right now. That will stop. It may not be in July and August, let's be clear, as people get off on holiday. Tomorrow is a key point. If we see the payroll surprise, you could see a bit more steepening coming up in the treasury curves around the world, and particularly the US. If it disappoints and it still looks hard to get people off their couches and back into work as they're being paid to stay at home, we could see some flattening come through as well. But neither of them are likely to be very large, I'm afraid. It's probably waiting now really through to late August when we get the Kansas Symposium, really the Fed talking about tapering before, we get anything exciting happen in terms of market levels. We could stay at these very high equity and very low credit spreads for a while, I'm afraid.
So what's your take on treasuries? And actually, has the Fed, or many presidents seem to definitely have turned hawkish. Has it been priced in?
I think the market moved past it really quick. It seemed to be like a positioning unwind in the first result after the Fed committee a couple of weeks ago. Now we're okay. It doesn't feel completely priced in. It feels like the CPI market is pricing a higher inflation than broad expectations are, and it feels yields are pricing in a slower rise in interest rates. So I think there is room here for yields to go higher, but as I said, it may be when we get to Jackson Hole that we see that impact rather than more recently. I'll be proved wrong, of course, very quickly with yields, as you always are.
Okay, are there good opportunities to buy when the market is down? And actually, what do you want to swoop up?
Yeah, so I still think risk is worth buying on dips. There's a lot of supportive factors out there, whether that's small cap equity around Europe and the UK in particular, I think could be interesting. Some parts of credit are still very interesting. 81 banks, the top end of high yield, are still giving you enough return and yield to take you through. But you do want to buy them on those dips, as you say. I think that's really important. And there should be enough volatility as we get into September and late August that you get those kind of opportunities.
Great, Luke, thanks so much. Luke Hickmore, their Aberdeen Standard Investments Director. Now, we're also keeping an eye, of course, on our Chancellor, Rishi Sunak, and on the Bank of England Governor Andrew Bailey speaking at Mansion House. So we'll have a look at exactly what they say, not only about inflation. We had a pretty stark warning yesterday from Andy Haldane about inflation possibly touching 4%. That would put, certainly, the Bank of England in a pickle. And the other thing that we just need to have a quick look at is, of course, what we heard from the Chancellor. We will hear from the Chancellor a little bit later, but he's trying to, once again, just position to sharpen the City of London's competitive edge. Andrew Bailey just saying the Bank of England should not overreact to temporary inflation. Coming up, the EU's COVID digital passports go live. We take a look at what the new system will mean for international travel. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax
in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the EU's COVID-19 vaccine certificates go live today. They're seen as the key to saving the summer. While the Delta variant has led to increased restrictions, Spain is hopeful that tourists will soon return to its shores. So let's get the very latest from Bloomberg's Maria Today, who's now in Madrid. Maria, great to have you on the program. I mean, this is a very important day, especially for the summer season in Spain.
It really is, Francine, and the government is hoping that this COVID certificate will see number of visitors triple this summer. Now, of course, Spain is a country that is a magnet for tourists. We're looking at one of the most visited countries in Europe, but of course, last year was a terrible, terrible year for the industry. Tourism numbers fell to a 51-year low, and tourism spending dropped by 86%. Now, yesterday I spoke with the Spanish Foreign Minister, Arantxa González-Laya, and she did tell me we're betting on the certificate to work, but also the vaccinations, even though there is a concern about the Delta variant. Let's have a look.
We are sequencing the variants in order to understand the prevalence. For now, extremely low of the Delta variant, but we will continue to sequence and to pay a lot of attention to ensure we know and therefore we can respond. But the best cure we have at the moment is essentially to continue vaccinating.
And that was the Spanish Foreign Minister speaking to us exclusively here in Madrid. Now, another thing, Francine, that she did mention is that the UK market is a market that's very, very important for the Spanish economy. She did say now a PCR test will be needed, but a lot of the restrictions, according to the minister, will depend and could change to become more flexible if the number of cases per population in the UK drops. Now, that would be, of course, a welcome news for the Spanish islands, which, as you know, are very, very much visited by British tourists.
So, Maria, just really quickly, it's a paper certificate, and I guess, you know, it depends on whether you're an EU resident, whether you're from the US or the UK.
Yes, and you know, Francine, they will accept this certificate. You get it on your phone. Yesterday, in fact, I was at the Madrid airport, and you could see they were already setting up the technology for today. You download it on your app, and ideally would show that you're vaccinated from across the world, as long as it's an EU-approved vaccine.
Maria, thank you so much. Our Maria Today there with the very latest, of course, from Madrid. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Chinese President Xi Jinping has struck a defiant tone in a speech marking the Communist Party's 100-year anniversary. Xi told thousands of party officials gathered in Tiananmen Square that China's opponents should avoid standing in the way of his government and calling the quest to gain control of Taiwan an historic mission.
We have never bullied the people of any other country, and we never will. We won't allow any foreign power to bully us.
Now, the UK's Chancellor is to outline what is described as an ambitious vision for reforming the country's financial services in his annual speech at London's Mansion House later. Rishi Sunak will set out plans to sharpen the UK's competitive advantage in the sector with a focus on technology and green finance. Bloomberg Surveillance will be speaking to the UK Chancellor in an exclusive interview at 10:30 a.m. London time. Global global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Our Anne Edwards will bring us that Chancellor interview. Now, he's been at the helm of Renault for 1 year after the tumultuous transition that followed the arrest of Carlos Ghosn. The chief executive of the French car maker, Luca De Meo, is now ramping up production of electric vehicles in Europe to compete with the likes of Volkswagen and Peugeot owner Stellantis. Now, as part of that revamp, Renault will be launching new electric versions of the 4L and R5. I can't pronounce them in British version because I only know them in French. Some pretty iconic French cars from half a century ago. But can Renault actually really keep it up? Well, Luca De Meo spoke from Paris with Bloomberg's Caroline Conan.
Today you are announcing you will have a new electric version of the iconic 4L after already announcing the relaunch of the R5. Do you think this is what customers want, new electric versions of iconic cars?
I think that the whole idea is to combine new technology like electric with emotional concepts, right? Okay, memory is a very strong emotional lever for a lot of people. So we are taking inspiration from our, let's say, glorious history to bring in the market cars where the people immediately will connect. I think that the soul of manufacturers is in their roots. So if you cannot connect with the roots, you lose a little bit the soul.
Do you think your alliance with Nissan and Mitsubishi is actually strong enough to really compete with the likes of Volkswagen on one side and Stellantis, the maker of Peugeot, on the other side, which are also obviously making a big push towards EVs? Do you think you actually should partner with other brands, other car makers in Europe or in Asia, for example?
Look, I think that in the case of EVs, probably one of the advantages of the alliance is not only that we have the scale, but that we both, from the Nissan side and the Renault side, were amongst the first to believe in EVs. We with the Zoe, Nissan with the Leaf, and then all the investment they made later. So we actually have an advantage when it comes specifically to electric cars. And we have the scale.
Does Renault have any plans to re-enter the Chinese passenger car market?
We have some ideas. We don't have concrete plans so far. So we are in a process of understanding what could be the possibility. I personally believe that an OEM that doesn't have a presence in China, it's like a table without a leg.
Well, that was Bloomberg's Caroline Conan speaking with the Renault chief executive Luca De Meo on his plans for the company's EV fleet. Now, coming up, sticking with the forward charge of electric vehicles, Nissan is also announcing a new £1 billion plant in the north of England. We'll speak to Ashwani Gupta, Nissan's chief operating officer, so don't miss that conversation. It's up next, and this is Bloomberg.
G7 today they need to wake up and listen to the science. There isn't room for discussion on this. Scientific inevitability, and they need to act. They don't need to talk anymore. They need to just act.
Climate change has been on the agenda of the G7 since maybe 2003. So we need to see action, not just talk. And we've only got 9 years left to halve carbon emissions if we're going to stop dangerous climate change happening.
United, we'll never be defeated. The world is possible.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Nissan is announcing a $1.4 billion expansion in the north of England. The new Sutherland hub will produce batteries and vehicles, building on the success of the company's flagship electric Leaf model. Now, the British Prime Minister Boris Johnson called the plans a vote of confidence in the UK. Joining us now is the Nissan Chief Operating Officer. He's Ashwani Gupta. Good morning, Ashwani, and thank you so much for joining us on Bloomberg. First of all, give us a bit of a sense whether the government has actually given you any reassurance that the plans won't change. You're confident that actually the rules that we have so far will apply and that this is a good investment for Nissan.
Thank you so much for giving me this opportunity. This is a great day. As you can see, I'm on the shop floor of our Sunderland plant. Today we unveil £1 billion of investment as Nissan EV 360 to demonstrate our roadmap to the carbon neutrality. To answer your question on the government support, the government support has been very crucial for us, not only in terms of financial support, but we are transforming the way we work, and we have a common goal, which is how to achieve the carbon neutrality. So the commitment towards achieving the common goal is most important in addition to that. The second thing is, what's also very important, the way we have worked together as a full ecosystem and not standalone as car manufacturing or battery manufacturing or the microgrid. So this project is collaboration of all the partners, including government, with a common goal, how to make our ecosystem competitive and environment friendly.
Can you give us a sense of a size and scope of actually how this, how big this plant will be and how much more you can increase in the coming years?
I think as far as our partnership is concerned and our investment is concerned, the size and the scope is quite significant considering that the investment we have done in the Sunderland on our new products. Now moving forward, I think we are going to grow. We are not finishing only with the model which we have announced today. Why? Because we do believe that Sunderland is one of the most competitive locations to manufacture cars, and now the electric cars, thanks to the full ecosystem which we are investing today.
Mr. Gupta, I mean, Nissan, I understand, plans to actually standardize about 70% of core EV parts with alliance partners. So why do a plant here and one in Europe? Does it not make sense to do one big one altogether that can then increase significantly?
That's a great question. When we talk about ecosystem, we talk about the full value chain, and battery and the electric car goes hands in hand to support each other. So the battery is common battery, which is alliance, which means the basic design and development of the battery is shared across the economy of scale. And as you know, that AESC Envision is is supplying the battery to us since 10 years. So the technology which Nissan has developed on the battery is the Nissan strength. Then the second point comes where to industrialize. And obviously, it is always competitive to industrialize close to the customer and close to the manufacturing plant. And that's why we took the decision to expand the capacity of the Sunderland battery plant, which is operational since 2013.
Yeah. Mr. Gupta, are semiconductor shortages in general getting tougher to deal with, or do you see a little bit of a let-up?
I think the semiconductor crisis is a new normal for us post-pandemic. This crisis has taught us how to plan for the unpredictable scenario. We are adjusting our production, but as you can see, we promised 12 models in 18 months, and you can see even in Sunderland, we have launched Qashqai, which is greatly perceived by the European customers. We were moving ahead. Obviously, we are doing some production adjustment, but I'm pretty sure we will be out of the woods soon.
Yeah. And Mr. Gupta, final question on the alliance. How's it going between teams and executives? Are you all getting along?
Oh, alliance, I mean, you know, this is a great teamwork. As you can see that Luca talked about the Renaulution, Luca talked about e-waste yesterday. You saw me today talking about Nissan EV360, and you saw the collaboration we have. So for me, we have entered into the new era of alliance because most of our platforms and powertrains are common. So what next? Yeah. So we want to use electrification as one of the most important pillars to define the next alliance, and this is what we have demonstrated on the battery.
Mr. Gupta, thank you so much for joining us today. He's the Nissan Motor Co-COO joining me this morning. Now, coming up, we'll have plenty more on the markets. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The Fed's Kaplan reiterates tapering should start sooner rather than later. The S&P 500 finishes one of its best first halves in 20 years. Rishi Sunak speaks at Mansion House. Andrew Bailey says the Bank of England shouldn't overreact to the temporary rise in inflation. Sterling falls on the governor's comments. And the NFT craze continues. Five-time Wimbledon winner Bjorn Borg puts his 1980 victory against McEnroe up for auction. We speak to the tennis legend later. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 1st of July. I'm Francine Lacqua here in London. So some of the biggest names in the hedge fund industry are now wading deeper into crypto. Bloomberg has learned that Steve Cohen's Point72 Asset Management is seeking to hire a head of cryptocurrencies, while the family office of billionaire George Soros has also started trading Bitcoin. So let's get straight to the markets with our Danny Berger. Danny, we're all crypto crazy.
We are all crypto crazy. I mean, what a great day for crypto type assets. Really excited for your NFT interview later, Francine. But yes, we have Steve Cohen and Soros wading deeper into this. Actually, in May, we did hear from Steve Cohen that Point72 was going to start looking at this. But one of the interesting things is that a lot of the conversation around Bitcoin has been around its volatility, that would scare off institutional investors. But look at some of these names that are trading it. It has not scared them off. In fact, you might think that someone like a Point72 or even a Millennium or Paul Tudor Jones, they like arbitrage type strategies. They like finding inefficiencies in markets they can take advantage of. And with the equity market so crowded, Bitcoin might be a really good source for that type of alpha. But the other thing that this has created is a mad rush for talent that can actually trade cryptocurrencies. It used to be some more niche type firms that would do the hiring here, but if you have Point72 getting involved, even Goldman Sachs looking to hire crypto type people, all of a sudden we have this really big market, and because it's a newer asset class, you're not going to get people with decades of experience trading it. So in terms of the hiring process, Francine, you and I have talked a lot about Wall Street competition. The challenge of recruiting people is going to be especially acute when it comes to crypto.
Yeah, I can't wait to talk more about this with you. Danny, thanks so much. Our Danny Berger there on crypto. Now, let's turn our attention to the private equity space. And in the past hour, we've learned that Montague Private Equity has agreed to invest in Waystone. Now, the deal values the company at more than $1 billion, including debt. Waystone is a provider of risk and compliance services to the asset management industry. Now, this may be the latest example of an asset manager actually outsourcing regulatory burdens in the face of increasing costs. Joining us now exclusively is Derek Delaney, a global chief executive at Waystone. So first of all, thank you so much for joining us, and congratulations on the deal. So what's the exit plan from Montague, and actually, you know, what exactly did you want to bring to them? What's the plan for the next 4 to 5 years?
Yeah, firstly, Francine, thank you for having me on. Pleasure to be on the show this morning. What we found with Montague is that they've very much bought into a vision that we had going back 3 years ago. The management company space and the outsourcing of regulatory substance in Europe is a relatively new phenomenon. It's around about 5 years. So that means it's serviced by quite small and niche players. But we're challenged to be a peer of the administrators, the audit firms, so we need to be of institutional scale. We, like the rest of the market, were struggling to reach that scale quickly enough. So what we actually done was partnered with Group MML Capital, who helped us bring together 3 mancos, DMS, Montlake, and MDO. And that helped us form this institutional scale. Whilst we can't comment on the value, those type of valuations validate that decision and prove out the thesis that it does create an institutional provider.
Yeah, has regulation actually been, so tough on asset managers? Is it just easier to outsource, or is it easier for the buy side to actually outsource some of this stuff?
It is easier, but it's not just regulation. No one values a manager based on how well they execute, how well they report to the regulator. People value their ability to select stocks. You were just talking about crypto. They value people for that. They don't value them for checking the NAV. So this is actually taking out the non-value add elements from the industry, and it extends wider than regulation. We actually, for a number of very large managers, we now do their trading. They select the trades, we vet them, we see if they allow it, we execute them. So it's far broader than just regulation.
Give me a sense. So your company has been created by a three-way merger. Do you have any more targets? How big do you want to become?
Do we have more merger targets? We constantly talk to our clients to understand what they need. So we did recently this year bring together 4 compliance businesses. And that's people who provide services in-house for managers, helping them deal with regulation. That's something our clients wanted. Just referring back to your crypto, we haven't decided to go there yet. Our clients are asking us to. Our clients are asking us to be global. Increasingly, they're having to set up in Singapore, in Australia. So we need to go geographically broader, and this deal facilitates us in doing that. As regards scale, scale isn't a goal in itself. If we concentrate on providing our clients what they need, we'll inevitably be rewarded by the markets and scale will come, but it's not the goal.
All right, thank you so much for joining us. Derek Delaney, there, Global Chief Executive Officer at Waystone. Now, in the meantime, we're also getting some news, first of all, about the Bank of England Governor, Mr. Andrew Bailey, talking about inflation. He's at an event, Mansion House, with our very own Chancellor, Rishi Sunak. Now, Mr. Sunak is giving a speech right now, and then a little bit later on, he'll also be in conversation with Anna Edwards. It'll be interesting to see exactly how they want to position the City of London. This is something that we've been talking about quite extensively over the last couple of days. Andrew Bailey, just a short moment ago, saying that actually policymakers should not overreact to a temporary jump in inflation, pushing back on speculation that he'll soon move to tighten monetary policy. Now, coming up, a famous victory, a pivotal moment in tennis history, and now an NFT. Bjorn Borg's 5th and final Wimbledon win goes to auction in time for the 2021 tournament. We speak to the tennis legend next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there is quite a lot going on in the markets just because it's the 1st of July, which means that it's the end of the first quarter. The focus firmly on inflation, and we heard from Andrew Bailey urging that policymakers don't do anything about inflation because he believes it's transitory. So he basically says, the BOE and other policymakers should not overreact to this temporary flat inflation jump. But we also heard from Rishi Sunak. He's giving his speech at Mansion House at the moment, and then our Anna Edwards will be in conversation with the Chancellor to see also how he wants to position the City of London at the forefront post-Brexit. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Italy's UniCredit says it will allow non-branch staff to work from home 2 days a week once post-pandemic work arrangements are put in place. Bank branch staff will be able to choose to work from home 1 day a week. The final arrangements will depend on how the pandemic does evolve. Now, activist investor Elliott Management is stepping up the pressure on GlaxoSmithKline. The firm has called into question CEO Emma Walmsley's leadership of the British drug maker. Elliott says Glaxo needs to beef up the pharma expertise in its top ranks before carrying out plans to split into two. Sources tell us Barclays is hiking junior banker pay, joining Wall Street rivals in digging deep to retain staff amid high levels of burnout. We are told base salaries for all U.S. analysts increased by $15,000 to a $100,000 base, while U.S. associates and vice presidents get a $25,000 boost. Staff outside the U.S. will get equivalent percentage rises. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, millions of first-time retail investors are piling into the market, and after the Bitcoin boom and the meme stock trade, some Wall Street veterans are calling for greater inclusion in the market. Blogs like Wall Street Bets have encouraged people to take investing into their own hands, and whilst some have lost money, others have, of course, experienced significant wins. Bloomberg's Eric Schatzker caught up with Orlando Bravo, Thomas Bravo, founder and managing partner, on the future of democratic investing.
What these two big movements are showing us is the need for inclusion in Wall Street and in the financial system by individual investors. So you take Wall Street Bets. I read a blog the other day that there was a SPAC sponsor that said, well, my SPAC is not for retail investors. I was like, well, I'm a retail investor. Could it be for me? Retail investors are smart, highly educated, they make good decisions, and they won in the game. And talking about one of the arbitrage situations, they have figured out one of them in the market, and they're doing that very successfully. So good for them. Take investing on your own hands, have fun at it, and yeah, they'll take risks, and sometimes they'll make money, sometimes they'll lose money, but I think it's a really, really good thing, and it's really inclusive, and people want that in the world of Wall Street and investing. And in crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it. Blockchain technology is completely disruptive. And on top of that, the currencies, they'll be worth more if more people adopt them. And the bet is it's highly likely that more people will adopt them than less.
So when there's a Wall Street Bets-driven short squeeze of whatever hedge fund happens to be short, whatever stock, are you sitting there sort of cheering from the sidelines?
I'm cheering so much because I also don't like shorting. I don't like betting against people. I don't like betting against companies. I don't like the short game. You're trying to hope somebody does poorly and even spreading potentially bad information that doesn't exist on that company. And this other movement makes hedge funds think about that again.
Sometimes that information is good information. Sometimes it's real. And sometimes the companies that are being shorted really are pretty lousy companies, and maybe worse than that. Maybe they're fraudulent. How do we deal with that problem if there are no shorts?
I would say don't buy the stock. Things will figure themselves out, but just don't buy the stock.
But that was Bloomberg's Eric Schatzker speaking with Orlando Bravo on the rise of retail investing. So we'll have plenty more from that interview throughout the day. In the meantime, Rishi Sunak speaking at Mansion House. You can watch, of course, the Chancellor's Mansion House speech live and in full. That's on Live Go on the Bloomberg terminal. He's just finished his speech and then he's sitting down in conversation a little bit later with us. Bloomberg Surveillance will be speaking to the UK Chancellor in an exclusive interview with Anna Edwards. That's at 10:30 a.m. London time. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Getting more confidence, and when I won the second set, then I knew I'm back in this match. Third set, I win, and we come to this fourth set. I played great tennis, and I had chances to win the fourth set. But I did not. I lost the match point. It's frustrating that I could not close the match.
Now, when the digital artist Beeple sold an NFT in March for a whopping $69 million, not only were records broken, but a precedent was set. The world of non-fungible tokens took off, and everything from the source code of the World Wide Web to the naughty's viral video Charlie Bit My Finger went on the block. Now, as we've just seen, to coincide with the start of Wimbledon 2021, five-time winner and, of course, Mr. Bjorn Borg is auctioning off a representation of his legendary 1980 victory against John McEnroe. Now, it's being called the first ever emotional NFT and will feature a 3D digital sculpture signed by the player, an exclusive interview, and a signed contract. Well, we're delighted to be joined today by tennis legend and former world #1 Bjorn Borg, who joins us now from Stockholm. Mr. Borg, as always, thank you for giving a little bit of your time to Bloomberg, and what an exciting day. I mean, an NFT, I kind of actually had to read the story. I looked at it. I mean, this is, pretty incredible. An NFT on the emotions of maybe one of the most incredible tennis matches ever played. Have you always thought that you wanted to do an NFT when you started hearing about them a couple of months ago?
First of all, thank you for having me. But NFT, with the moments and emotions, what you go through in tennis history, for me personally, that was the biggest thing I ever could dream about. It was Wimbledon in 1980, and for me to be involved with this kind of motion again, with technology and art together, I think that's very interesting because it's a new area for me, but I think this definitely is going to be part of the future.
I mean, it's definitely a new area for a lot of people. Are you a believer in NFT? Have you bought any NFTs or thinking about buying any?
I definitely been involved now for a time being and not being, but I like to be involved and I am involved. But it's a lot of interesting things, and I definitely will not only to buy, but to see all these things, what they do, what they can do with technology and art. It's so interesting, and yeah, I definitely will buy a few things, yes.
Okay, you'll buy a few things related to sports. How much do you think you'll actually get for this NFT?
No, I think not only in sports, but I think in general, when you have emotion, could be personalities, people in other areas. But okay, I am a person in sports, and I believe a lot of athletes will connect to this idea because you have so many emotions and moments in life that people are very interesting to be involved with, to be part of it. So that, like I said, it's gonna, I believe it's going to be a really good success.
Yeah, and it's amazing that it is about emotion, and actually the emotion of that match and that day for you. How you actually left the sport very young. How do you think tennis has changed over the years?
I think today it changed a lot, tennis today, compared when we played. For instance, myself and McEnroe. You have Federer, Nadal, Djokovic. To see this guy play today, it's like they are like kind of an artist. I mean, to see them, you know, perform on the tennis court and what they've been doing for the sport in general, it's fantastic because tennis is one of the biggest sports in the world. And for me personally, to watch these guys play, it's fantastic.
What is, I mean, who's the most impressive player today? Is there one that you would actually, you know, like to play now?
No, I think especially these three guys, like I said, Federer, Nadal, Djokovic, as long as they continue to play, they do so much publicity for the sport in general. And that's very important. And for me, as I have to get involved with this too, I'm the captain of the Team Europe Laver Cup. And McEnroe is the captain on the rest of the world. And for us to get together with this generation, new players coming up, it's a big thing for both of us.
Mr. Berg, when you left, of course, you know, the tennis has changed because now it seems that we talk a lot more about mental health issues. Naomi Osaka spoke openly about her mental health issues. Are there too many media obligations on top stars?
I think it's a lot of money involved with tennis. It's, like I said, it's biggest sports in the world. So I think in general, it's part of tennis. You have to do certain things. And that's very important to promote yourself, promote the sports. So it's, of course, it's tough to do certain things, but it's part of tennis. It's part of the sport. It's part of the sport. So they have obligation and they have to do certain things, and you should do these things, even if it's even if it's tough or psychologically or mentally, it's very difficult. But of course, you make a lot of money as an athlete, so you have to do certain things.
Your son debuted at Roland Garros. What kind of advice do you give him?
not too many advices. He has his own team. If I say something, he doesn't listen to me. So it's better he has his own team, and he's doing very, very well.
Mr. Burke, do you ever regret actually leaving sports so young when you see players like Roger Federer?
No, not really. I was happy. I had a great life involving tennis. I retired very young, but see Roger or Nadal or Djokovic, they are not all, but they're playing for a long time, and that's great. But no, I have no regrets. No, I was very happy what I did in tennis and what tennis gave me back, so I have no regrets.
Mr. Björk, maybe one final question when it comes to blockchain. I know you were one of the first ones to talk about blockchain, certainly in the sportsing world. How much do you think about the climate impact of, for example, cryptocurrencies or blockchain technology and even NFTs? I mean, there's now a climate controversy swirling around some of these projects.
I know it's I believe it's definitely going to stay and it's going to be part of the world, and like what I'm involved now with emotion and moments, I think it's very important. People want to remember certain things like emotions. I mean, for an athlete in sports, it's the most beautiful thing you can do, or you want to dream about these things. And so definitely, I believe it's going to stay. And it's going to be part of the future. And I like to see other athletes getting involved too with the emotions and moments, because that's what we live for in the sports world.
Yeah. Thank you so much for joining us. Björn Borg, their 11-time Grand Slam winner and former tennis world #1. Now, we have a lot to talk about. It's the new quarter for the summer months. Of course, we also have Rishi Sunak in conversation with Anna Edwards. A little bit later on, we'll ask him about how exactly he sees the future of the City of London post-Brexit. The other thing we need to talk about is, of course, what we heard from Andrew Bailey. Now, it is moving pound at the margins. Andrew Bailey, the governor of the Bank of England, saying the BOE should not overreact to temporary inflation rise. This is Bloomberg.
Freedom delayed 4 more weeks. That's the delay expected to be added to the lifting of all lockdown restrictions in the UK. It had been due to happen on June 21st, but UK Prime Minister Boris Johnson to address the nation later today and to push that date into July. It's all down to a surge in the Delta variant, and government ministers thought to want more people to have their second COVID vaccine before they ease all restrictions. How are markets responding? Well, they're largely taking it in their stride. The FTSE 100 actually gaining ground. Strategists saying that delay largely priced in, that we could see further weakness for travel and leisure and hospitality stocks. The pound falling against the dollar, though Nomura saying this weakness likely to be temporary. In fact, money markets largely bullish on sterling, given the pace at which economic gloom has been lifting here in the UK. Indeed, last week's GDP figures pointed to an economy that is recovering quickly. And later this week, we'll get unemployment, inflation, and retail sales data that should all further illuminate the economic recovery.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Hope is that we'll continue to really dig into the data over the next few months to understand how the coverage is going, especially with the Delta variant, which is absolutely gaining strength across the globe.
We are sequencing the variants in order to understand the prevalence. For now, extremely low of the Delta variant.
The good news is that the mRNA technology is poised to be able to react.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong this Thursday, July the 1st. We have you covered our top stories today. Xi Jinping talks tough as the Communist Party marks its 100-year anniversary. China's leader warns foreign adversaries and vows to gain control of Taiwan. Waiting on OPEC, the market watches as a cartel and its allies prepare to decide what to do about increasing oil output. And Rishi Sunak's bold vision for Britain, the Chancellor of the Exchequer, will outline his plan for reforming boosting the finance industry's competitive edge. We'll hear from Sunak in an exclusive interview. So, Kaylee and Matt, first of all, happy quarter. It's the new quarter after the first quarter just finished. And Kaylee, I would actually look at the Chancellor and what we also heard from the Bank of England Governor, Andrew Bailey, saying very clearly once again that policymakers should not overreact to what he sees as temporary inflation.
Yeah, Francine, it's a new quarter, it's a new half, it's a new month, and yet the debate still seems to be whether or not inflation is transitory and what that means for central banks. So basically, nothing has changed. I know Matt will run us through any reaction in UK assets to Andrew Bailey's comments, but I want to run us through the Asian session first because it was mostly negative. Of course, you did have manufacturing PMIs in a number of countries coming out overnight, showing activity slowing down because of continued virus restraints. So that took most of the major benchmarks lower. China, though, did end in positive territory after some fluctuations. The CSI 300 up about 0.1%. And of course, that followed those remarks from President Xi Jinping on the 100th anniversary of the Communist Party, striking a pretty defiant tone. And after those remarks, the Chinese yuan basically flat against the US dollar, while the big underperformer in Asian currencies is the South Korean won, weaker against the dollar by about 0.6%. And that is after Seoul decided to keep virus curbs as they are rather than lifting some of those restrictions. As for what the picture looks like here in the U.S., we did close at record highs again yesterday, and it does look like those gains will continue today. We're up about 11 points on S&P futures at this point. In the Treasury market, no action to speak of. We're just around 1.47%. We basically haven't seen much movement in yields in 3 sessions now. The dollar is stronger for a 4th day, up about 0.2% at the moment. And then, of course, the big news of the day today may indeed be OPEC Plus making that supply decision for August and beyond as it weighs the tighter market. And ahead of that, WTI crude up about 1.4%. We're now looking at just around $74.50 a barrel, Matt.
Yeah, we're seeing a big jump in oil prices, Kaylee, and that's what's really moving markets over here. So far, Bailey's comments not really coming through on any of the charts that I'm watching, but you can see it is a blockbuster day for risk assets just by taking a look at this map. We are up across the board 1% and more on European equity indexes, and every single industry group is gaining, being led by energy. As I said, oil really moving the markets, but we also see travel and leisure as the second biggest leader, which is very interesting. We're going to talk EU passports a little bit later, and then we see banks as well, the third biggest leader. So really pushing equities higher. You can see that investors are selling off debt with the German bond yields right now rising, still negative 19 basis points, but at least they're on the way up. And Brent crude is the global benchmark. I also always like to remind New Yorkers, $75.59 a barrel, with the pound down 137.79, but it was down before the Bailey remarks as well. I looked at the pound, I looked at gilts, not a lot of movement, although I agree, Francine, that the comments are definitely interesting.
Yeah, I like the fact that you say indexes. It gets me every time I say indices. I don't know if it's a European U.S. thing.
That's Bloomberg
Matt,
style.
also,
just type STYL go on the terminal and you'll see indexes is our style.
Semantics.
Yeah, but how you say it, then it's up to you. I don't know if there's actually a voice pronouncer. Now, stocks are definitely priced to perfection, Matt, and of course the focus means that they're vulnerable to data misses. Now, a look at what's ahead today. OPEC Plus ministers meet virtually to decide whether to hike output. We'll get the latest read also on jobless claims in the U.S. That's at 8:30 a.m. New York time. June manufacturing data follows after that at 9:45. Markets are closed in Canada for Canada Day. Digital COVID passports also come into force today in the EU. So if you look at the EU vaccine certificates, I feel a little bit left out because we have something similar in the UK, but they're actually not in force yet. So I know, Kaylee, you're traveling here to the EU. I know, Matt, you can travel around in the UK. It's just that little bit more difficult.
I'm worried about actually traveling home. You're coming. You're coming tomorrow?
Yep, tomorrow afternoon. Athens, here I come.
That's awesome. That's awesome. Well, I think they're going to let you in. I don't know if I'll be let in when I go to New York next week. Hopefully you get back by then because I can't leave until you come back. But I guess I'll have to bring a test. Ah, good. Okay, Fran, you can man the helm for us.
Yeah, so let's also talk about manning the helm at the top of the Communist Party. The Chinese President Xi Jinping has struck a defiant note in a speech marking the 100-year anniversary of the country's Communist Party. He hailed the party's successes and warned China's adversaries to avoid standing in the way of his government.
The Chinese people will never allow any foreign forces to bully, coerce, and enslave us. Whoever attempts to do that will surely break their heads on the steel Great Wall built with the blood and flesh of 1.4 billion of Chinese people.
Joining us now from Hong Kong is Bloomberg TV's chief North Asia correspondent, Stephen Engel. Stephen, what exactly did we learn today?
Yeah, it was a nice segue earlier because Mao Zedong was known as the great helmsman, of course. And you saw Xi Jinping standing there at the top of the Gate of Heavenly Peace, the entrance to the Forbidden City, in a rousing speech, wearing a Mao suit, by the way, talking about the last 100 years. And his pitch to the nation was the Communist Party is what brought this moderately prosperous. That's the declaration, a moderately prosperous nation. And that was due to the Communist Party's leadership. Now, you might snicker and say, moderately prosperous? This is a 15 trillion plus economy, $1 trillion economy. You know, in 1966, at the start of the Cultural Revolution, the year I was born, by the way, this was a $76 billion economy and $100 per capita. Today, 15 trillion plus and $10,000 per capita. So they have made a remarkable ascension, but at the same time, they're facing a lot of critics, and you just heard that soundbite from Xi Jinping. He struck a defiant tone against, he didn't name the United States, but the United States was definitely in people's mind when he talked about he's not going to be bullied. China's not going to be bullied.
Stephen, in addition to being the 100th anniversary of the Communist Party, it's also the 24th anniversary of Chinese rule returning in Hong Kong. What's the feeling like on the ground there today?
Yeah, there are a lot of mixed feelings here. You know, Hong Kong has been through a very difficult year, as the world has, of course, with the coronavirus. But on top of that, has been 1 year now, since yesterday, the 1-year anniversary of the imposition of the national security law. And I will tell you, the fabric of society has changed. This national security law has changed the thing, changed the outlook on people, and has polarized the city, obviously. There's not as many protests. There's hardly any protests. In fact, today, police presence is huge, 10,000 officers. We've been watching the feed live from Causeway Bay, the main shopping area here on Hong Kong Island. There's been, according to the South China Morning Post, 3 arrests so far. But, you know, they've put a security blanket on the commemorations for the handover 24 years ago. No commemorations for the national security law 1 year on. But yes, there were official commemorations for the 100 years of the Communist Party. But it's a muted celebration and mixed feelings here in Hong Kong.
Stephen, thanks so much. Stephen Engel there was the very latest, of course, on the celebration. Now, OPEC Plus ministers meet today to decide whether to hike output. Nuclear negotiations with Iran, of course, may be a key talking point. So let's get straight to Will Kennedy, Bloomberg executive editor for energy and commodities. Will, we were talking about it over the last 48 hours. Are we close to an agreement that would be suitable and actually deal with the markets?
I think the consensus is that we will get some kind of agreement today. Negotiations are clearly happening behind the scenes. People are keeping a very tight lid on what exactly is being discussed. The formal meetings start at about midday London time today. So as I say, there will be some kind of compromise. What the market really needs to understand is how much oil, the extra oil OPEC is willing to put back in the market and when. I think the expectation is that they will put some oil back in, maybe 500,000 barrels a day. But we're talking against the background of an extremely tight oil market. You see, and you've mentioned already, that prices are up today above $75 a barrel with Brent. That really tells you that OPEC does need to supply the more market. It's the highest in 3 years.
Will, thanks very much. Will Kennedy there talking to us about OPEC. We'll be on the watch, obviously, today, especially as these oil prices continue to rise and take the market with them. Now, some of the biggest names in the hedge fund industry are wading deeper into cryptocurrencies. Bloomberg has learned that Stephen Cohen's Point72 Asset Management is seeking to hire a head of cryptocurrency trading, while the family office of billionaire George Soros has already started trading crypto. Let's get more with Danny Berger. Danny?
Matt, one of the fascinating things about these stories is that because of the volatility in the crypto market, there had been a lot of thought that that would scare away more hedge fund, more institutional type traders. But it's kind of hasn't really dented that story, perhaps because with that volatility, you can get the likes of these different hedge funds that are getting involved to find alpha, to find dislocations in the market. So Point72 now looking for a head of crypto trading, as you say, Soros's family office getting into it as well. And they join their peers like Millennium Asset Management, Paul Tudor Jones, even Brevin Howard. So all of these people getting involved. But one of the consequences of this, of course, is now there is this intense search for talent, for people who can actually trade and understand Bitcoin markets. It's young enough that you're not going to find someone with decades of experience. So Kaylee, this has really gone from a hunt that was just from niche firms to now the big players joining in, trying to find people who they can hire to really make money on this market.
Yeah, don't hire me because I'm still not sure I fully understand the crypto markets. Danny Berger, thank you so much. I do want to take a quick look on some stocks moving in pre-market trading here in the U.S., beginning with one that made its trading debut yesterday, Didi, the Chinese ride-hailing giant, the second largest Chinese IPO in the U.S. ever. It had a pretty lackluster debut, only rose 1%. Today, though, a bigger move, up more than 8% in early hours. Another stock moving to the upside is Novavax, of course, a COVID-19 vaccine maker. A study out of the UK yesterday finding that it was 96% effective in protecting against non-alpha variants. So as a result, that stock up the better part of 3%. But another vaccine maker moving to the downside is CureVac. The final analysis of its trial of its vaccine found only 48% efficacy. As a result, that stock down more than 10% before the bell, Francine.
Yeah, I'm looking forward to hearing more about that and vaccines in general. Coming up next, we'll talk with Paul Donovan. He's UBS Global Chief Economist. We'll talk to him, of course, about inflation. We'll talk to him about what the Bank of England governor just said. We'll also talk to him maybe about the markets being priced to perfection. And then a little bit later on, an exclusive conversation with the UK Chancellor of the Exchequer. He is Rishi Sunak, or Anna Edwards, in conversation with the Chancellor. This is Bloomberg.
ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
I think it'll be far healthier to start soon and sooner rather than later. Why? Excess risk-taking, excesses in the housing market, and excesses and imbalances in the overall economy. And I do believe if we take our foot off the accelerator gently now, we'll have more flexibility down the road to avoid more abrupt action or severe actions in the future.
And that was Dallas Fed President Robert Kaplan speaking exclusively to Michael McKee on Bloomberg Television. Joining us now is Paul Donovan, chief economist at UBS. And Paul, I wonder if you think the Fed strategy is different this time and if that's going to reduce the market structure issues that we saw last time during the taper tantrum.
Well, I think there is a difference because the Fed has learned from the events of the last taper tantrum. They've been very, very clear to communicate that monetary policy, the interest rates, the Fed funds rate, isn't going to be changing, and that the scaling back of quantitative policy and bond buying when it happens should not be interpreted as a signal of sudden action on monetary policy. So I think that nuance of communication has got through. And that hopefully is going to prevent there being sort of the very strong adverse reactions that we had 7-8 years ago.
Paul, does the UK actually have more of an potentially have more of an inflation problem? And we just heard from Governor Bailey saying, look, it's still temporary, don't freak out. But actually, we hear from Andy Haldane it could reach 4% by Christmas. Does it have a bigger inflation problem than both the EU and the US?
I don't think that it does. I mean, so one of the things that we're seeing across the world at the moment, of course, is there isn't inflation in the sense of broad-based price increases. The price increases are extraordinarily narrowly focused. So in the UK, the trimmed mean inflation rate, you're looking at the central 90% of price changes, it's 1.2%. I mean, this is hardly Weimar Germany. So you've got a very narrow focus to what's going on with inflation. And I think that's why Bailey and other members of the bank are taking a relatively prudent approach. The one unknown that we have with the UK, of course, is the labour market. Because it's not clear how many migrant workers left during the pandemic, how quickly they might come back, whether automation might have made their jobs redundant anyway. So there's perhaps a little bit more uncertainty about that aspect of labour market supply.
Well, let's talk about the U.S. labor market as well, Paul. That all-important read coming tomorrow with the jobs report. And yes, we care about the headline number, but also wages, because there's an inflationary read into that as well. What are you expecting in terms of wage pressures?
Well, one of the interesting things, of course, is that when we look at actually genuine wages, they've been slowing down over the last 3 months. So the problem with average hourly earnings is it's an average number and it doesn't sort of quality adjust and it doesn't make a comparison. So if you get fewer low-paid jobs in the labor market, average hourly earnings goes up without anybody being paid a dime more. So what we have, of course, is the Atlanta Fed wage tracker measures, which are actually a like-for-like comparison. It's an apples-to-apples comparison. And those have been decelerating. They're all still growing. I mean, we've still got wage growth. Of course, we've got wage growth. But the wage growth is actually slowing down. It's slowing down a lot more for higher paid workers and for higher skilled workers than it is for lower skilled workers, which fits with the narrative we've been hearing in the economy. But it's not actually signaling a great deal of wage pressure. In fact, it's signaling that wage pressures have moderated a little bit since the first quarter of this year.
You know, you mentioned it's not exactly the Weimar Republic It's not even the 80s, Paul. You know, I remember my parents telling me about 17% mortgages and seeing treasuries 10-year for 13% yields. Why is everyone so freaked out about 3 or 4% inflation? Is the concern that it's a slippery slope?
So I think there's a mix of things here. I think that there is a generation that doesn't remember inflation. I mean, I can remember, you're talking about 17%. I can remember my mortgage rate going over 21% at the start of my career, when sterling was crashing out of the exchange rate mechanism. Am I sitting at my desk and looking at the screen coming through with these announcements and wondering, whether I was going to lose my house by the end of the day? So, I mean, we've had this very unusual period of very, very low inflation over the last few years, which perhaps has generated some complacency. I think there is a little bit of concern, Paul, that there might be some kind of regime shift. Yeah.
I mean, 21%, I'd probably definitely not own my house. I mean, the market's, even if you go to like 4%, the market would freak out, right?
Well, exactly, but we're not going to go there, are we? Because we are, I think, still in a generally low inflation environment. And Matt was talking about the 1980s or the 1970s. Remember, in the 1970s, President Nixon was setting the price of a hamburger. And we have wage and price controls, which is a complete disaster. And of course, when those controls ended, prices exploded. Now, whatever your politics, no one is accusing President Biden of sitting there and dictating what the price of a Big Mac should be. It's dictated by market forces. We've got very different labor markets. We've got a very different inflation rate now because we've got different things in the basket, quite rightly. It's not going to be that bad. We at the moment have got a small number of prices driving the headline rates. We don't need to worry too much.
Paul, I remember actually feeling very rich in the 90s because I had like 1,000 lira, which was the equivalent of like, 50 pence. But that's what inflation, was like in Italy. Paul Donovan, chief economist at UBS, joining us today. And of course, Kaylee also reminded us there's a wonderful index looking at the price of Big Mac. Bigmas, I think is how you type it, on the terminal. Now, coming up on Balance of Power, the White House Council of Economic Advisors member, Jared Bernstein. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg. First word news, and a grand jury in Manhattan has handed down criminal charges against the Trump Organization and CFO Alan Weisselberg. Now, the charges will remain sealed until today. They're the first to emerge from a multi-year investigation of the former president's company. Neither Donald Trump nor his sons are expected to be charged. In New York City, Eric Adams saw his lead over Catherine Garcia grow smaller in a corrected vote count for the Democratic primary for mayor. That came a day after the botched release of erroneous ranked choice voting results plunged the count into chaos. Now, the race will likely be decided by a count of 125,000 absentee ballots. Now, coming up, we'll look at, of course, COVID-19, the Delta variant with Johns Hopkins Center for Health Security senior scholar Gigi Cornwell. This is Bloomberg.
Morning was a bit of a historic day. It was the first time Indigenous designers showcased at Australian Fashion Week, and it was a full house of all Indigenous talent.
It made me so proud. Absolutely beautifully done. I mean, the designers, the pieces on there, I think just about every model or every second model was like, oh, I want that, I want that. So each of my pieces, we have our signature prints, which are each tell a story and is definitely a contemporary way of experiencing Aboriginal culture. And then each of my pieces are named after, inspiring Aboriginal and Torres Strait Islander women. So when the customer buys something, they're learning about the story, they're learning about women. I would hope that it isn't tokenistic, and I would hope that it's not done to tick a box. And so, those things have to be, you have to be mindful about that. But I think it's incredible what's been achieved so far, but, there's always room for growth. I think the elevation of Aboriginal and Torres Strait Islander people in these spaces, it's long overdue, and it's a really powerful and incredible time, I think, and to be a part of that is really special.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, if you look at the markets, first of all, happy second quarter. I don't know whether the focus
happy
will
Thursday.
be, of course, on Happy Thursday. Is that a thing
Happy
now?
July.
It's Thirsty Thursday.
We're happy.
I always forget. It sneaks up on me, and I'm so excited when we get to it.
Yeah, I'm quite excited about it too. We're looking at, I know there's not been much movement, Matt, on sterling, but we're looking at what the Bank of England governor said. Again, temporary inflation should mean that actually policymakers, he's asking basically them not to freak out.
Yeah, don't freak out is probably good advice, right? There hasn't been a lot of movement in sterling, but there has been a big climb in the dollar against all currencies. I thought the fascinating currency move was the yen yesterday. The dollar just shot up against the yen. You can now buy 111.5 yen for $1 US. So it's a good time, I guess, to go to Tokyo, if you can get in.
If you can get in. Kaylee, the market's definitely priced to perfection.
Yeah, they are, Francine. I will say in Europe, we did see a negative day yesterday, so it wasn't the best way to end the first half, but it's a better start to the second half today. Granted, we are off the highs of the session, but still up about 0.6% on the stock 600. And here in the U.S., as you said, price to perfection, Francine, another record high for the S&P 500 yesterday, and that looks like it may continue today with futures up about 0.2%. In the Treasury market, we are ticking up on the 10-year yield by just around a basis point. We really haven't been seeing big moves for the past couple of days right now, just shy of 1.48%. And of course, we are awaiting that OPEC plus supply decision later on today. And ahead of that, WTI up a little more than 1% above $74 a barrel. And of course, another thing happening today, and this is exciting news for donut lovers, Krispy Kreme will be making its trading debut. Its IPO did price below the range last night, so we'll wait for that. And of course, the trading debut for DD happened yesterday. Wasn't that exciting? Only a 1% gain in that first day of trading. Today, though, up 9% in pre-market trading. And another stock that recently made its debut is FirstDibs.com. It's lower by more than 13% this morning. Another stock to note, Micron Technology, earnings after the bell last night. Met expectations, solid demand outlook, doesn't seem to have been enough, though. That stock down 2%. And CureVac plunging 13%. Efficacy data for its COVID-19 vaccine, final analysis of its trial, just 48%, Matt.
Do you know, it's a tradition every year Krispy Kreme comes down to the floor of the New York Stock Exchange and just hands out boxes of glazed donuts. I have seen traders consume entire boxes on bets. They can go through multiple boxes of Krispy Kreme donuts, and it's so
could we, Matt.
Delicious. Yeah, I could definitely. Remember when they were at Harrods?
Yeah, we could do a competition.
You could buy them at Harrods for a while. All right,
now they
I
actually have
am.
standalone shops.
Well, that's even better, because then you don't have to go into Harrods. I'm looking at the COVID map here because there's an interesting thing going on as we all kind of freak out a little bit about the Delta variants. We don't really see the mortality rate rising. We do see infections continue to rise. This is an actual map, so that's interesting. I was thinking of a graph. But by the way, I'd like to welcome our listeners on London DAB Digital Radio. Normally, I would walk you through a graph, but there isn't a graph here. If there were, you would see infections rising, recoveries rising, but deaths not rising. So, Francine, the good news is, or at least not rising to the same extent, the good news is the vaccines have slowed down the more serious disease and death that we were seeing from these infections.
Yeah, certainly, and it's good news when you're in a developed country that is vaccinating at full capacity. Now, the Moderna chairman and co-founder, Noubar Afeyan, is warning, though, the world to stay vigilant as mutations emerge. Now, he spoke with us yesterday on Early Edition.
The good news is that the mRNA technology is poised to be able to react. It's not as though if something really bad starts appearing, it's going to have to take us years and years to react. We showed already we could do this in months. We could do it again, even in a shorter period of time, if we all stay vigilant and coordinated.
Let's get straight to Gigi Granval, Johns Hopkins Center for Health Security Senior Scholar. Gigi, thank you so much for joining us. What does this tell us? That we'll have more iterations of COVID-19, that we just need to live with it, or that actually we just need to vaccinate as quickly as possible so that we're ready for the next variant?
Well, both. We need to vaccinate because, as you mentioned, it's only the developed countries that have had access to vaccine. Not all of those countries on that map were blue. We need to make sure that the most vulnerable people get access to vaccine. And then we'll start to see, we need to make a bigger push for the people who are not going to raise the mortality rates, but who are still being hospitalized and getting sick.
Here in the U.S., of course, as you say, many of us are fortunate fortunate enough to be fully vaccinated, and yet places like LA are now going back to recommending masks indoors, even if you are vaccinated, because of concerns around the Delta variant. Does the science tell us that might be necessary?
Well, the Delta variant is replacing the others. It's becoming the dominant version of SARS-CoV-2 that we're seeing. And it does kind of make you know that you're going to bump into this virus at some point in your life. It's going to be around for a long time, whether it's Delta or some other Greek letter. But so, if you have the opportunity, you should get vaccinated now to give your immune system a fighting chance. As far as mask policy, they're not everyone is able to counter, the virus as well as others. Some people are immunosuppressed. Not everybody is able to be vaccinated yet. There are kids under 12 that can't be vaccinated. So measures like that, should be more protective for them.
Why?
I know not everybody's going to do it, though.
Why can't they? Why can't kids under 12 be vaccinated?
Because the FDA has not given an emergency use authorization to that group yet. And we're hoping that it'll be soon, hopefully September. I have an 11-year-old. I cannot wait. Charlie considered lying about his age, but he would have to lie about his age. That didn't seem like good parenting.
Gigi, probably not good parenting. Gigi, there are still a lot of questions on whether
people have
you
done
can
worse.
still transmit it. I'm sure people have done worse, but we won't, Matt. Gigi, there are questions about whether you can transmit it if you have it, even if you're double vaccinated, whether you should have masks. I mean, there's so many questions. If there's one thing that you would want to know now because it would enable us to protect ourselves better, what would it be?
So far, the evidence shows that people do not transmit if they are vaccinated, but they might have a little bit of disease, minor disease. And that's just because, an immune system is not some sort of force field that protects you. It's really a training program for your immune system. So when you encounter the real virus, it helps you fight it off. And so for some people that might mean a little bit of disease, but things could have been so much worse if you didn't have that vaccine. So there are so many things that we need to know. It's hard to tease out all the variables. But right now, it doesn't look like Delta is causes more severe illness. It just shows that we're going to have to live with this virus forever, and we need to vaccinate everybody.
Forever. Forever is a very long time, Gigi. And of course, there are still many pockets, of course, the developing world behind on the vaccination effort. But even here in the U.S., there are pockets of the country in the South, for example, where the vaccination rate is much lower. Does that mean we could have another wave?
Yes. Absolutely. The people who are not vaccinated are definitely not going to do as well with the virus as people who are. And that's that. And then it's going to keep it circulating in the community. That is absolutely the case. I think vaccination rates will probably go up, but, will go up for the wrong reasons. It'll go up because people will know somebody who has had severe illness with COVID. So I hope that people take the chance now while they can still protect themselves before they have that kind of serious experience.
Gigi, thank you so much. Gigi Gronval there at Johns Hopkins Center for Health Security Senior Scholar. Now, the Johns Hopkins Bloomberg School of Public Health, of course, is supported by Mike Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Now, we're also just getting some breaking news on Robinhood. The company will set aside as much as 35% of its IPO shares for individual investors. That's according to Dow Jones, which cites sources. A reminder that yesterday, U.S. authorities fined Robinhood $70 million for regulatory failures. We'll have, of course, plenty on that throughout the program. Coming up next, though, our exclusive interview with the UK Chancellor, Rishi Sunak. We'll talk to him, or Anna Edwards did that interview. It's about the City of London and some of the new rules put in place. This is Bloomberg.
身体，会尝试去做7+2，再次感谢曾经给我力量、给我能量的艾瑞克。
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Friday is Jobs Day on Bloomberg Television. May's jobs report fell short.
I'm going to call it a modest disappointment. 2 months in a row.
Will this month's hit the mark? The June Jobs Report, Friday morning on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kayleigh Lyons in New York. Now, to Rishi Sunak's bold vision for Britain, the Chancellor promises to bolster the finance industry's competitive edge for decades to come. Now, Sunak spoke exclusively with our very own Anna Edwards earlier this hour.
Europe is always going to be a close partner and ally of ours, and we're always going to be constructive in that relationship and remain available to answer any questions that they might have about that process, which we completed some time ago. But what I'm interested in doing is making sure that our financial services industry here in the UK is something that we can all and should be very proud about, because it creates jobs locally and prosperity nationally. And that's why today we published a roadmap to deliver our vision for a financial services industry that is more open, more competitive, more green, and more technologically advanced. And that's the exciting agenda that we're delivering.
Yes, and how will that roadmap stand up to the competition then, Chancellor? We saw that JP Morgan just this week opened a 6-story trading hub in Paris. The French finance minister said, thank you, Brexit, for that. London is still the biggest financial services hub in Europe, but that is being chipped away at. Does that concern you?
No, I think if you look at every survey that's being done, it still shows that the UK and London remains the premier destination for financial services. And that's because we have fantastic strengths here, but we're going to build on those strengths, not rest on our laurels. And the roadmap that we published today, I think, shows that London, the UK more generally, will be the most advanced place, the most exciting place for financial services anywhere in the world. We're going to be a leader in green finance. Just look today at the documents that we published around a green sovereign bond and a green retail bond, our plans to create a carbon offset market, just one of the many things we're doing to show leadership globally, create new markets here and new jobs.
You say you want to lead on green finance, but the green gilt you reference isn't coming until September. Some suggest that the UK is a little late to this particular party. How will the UK ensure that gilts stand out from the crowd?
Well, if you look at the framework document that we published yesterday, what it will show you is that this is probably the most ambitious green sovereign gilt issue of any major country in the world. It will certainly be the largest. There are some features about our reporting which are unique, and it will be done in parallel with a retail product. So ordinary savers can also participate in investing in green projects backed by the government, and that's something that I think no other country has done with the same robust framework behind it. Alongside that, we're creating a new carbon offset market here in the UK. So again, across the piece, we are demonstrating leadership. The last thing I'd add is we're also able to do that internationally. We've managed to persuade all our G7 allies to make climate disclosures mandatory across their economies over time, facilitating the flow of capital to the right places. It's a good example of the UK punching well above its weight and doing what we do best on financial services.
And thinking about financial services and representing them, you've been working hard, of course, with the OECD and the G7 on agreeing minimum taxation for many global businesses and industries. But you've been trying to craft an exemption for financial services. You said today that you don't want banks to pay any more in taxation. So have you managed to achieve an exemption for financial services?
Well, I won't comment on ongoing negotiations that we're having on the tax topic, but I just make the point that, again, this is something that I think we could all be enormously proud of. The UK showing international leadership on reforming the global tax system, an issue that was started being discussed almost a decade ago, and under our watch we've managed to bring people together at the G7 to agree a historic deal to make sure that the right companies pay the right tax in the right places. That's hugely important for the issue of fairness, and we're going to take that deal to the G20, and those discussions are ongoing, and I remain, as I said, hopeful that we can build a broad coalition around this idea.
The financial services sector, of course, watching the UK economy. We have 6% of the UK workforce, 2.4 million people, I think, still on furlough. Is it fair that businesses now have to pay more to contribute to those furlough costs, even though the UK government has delayed the full reopening of the UK economy?
Well, I think if you take a step back, what is happening here? Businesses are being asked to contribute just 10% alongside the taxpayer, on the other hand, who's paying 70% of their employees' wages. I think that's very reasonable and is in common with the way that most of these schemes work internationally, and they have been working that way for much longer than ours, which has been very generous in its approach. Again, this is only one part of our comprehensive financial support for businesses. I won't go into the full list of all the things we're doing now. But as regards performance in the jobs market, 1 million people came off furlough in the last month alone. I think we're doing a great job at getting people back to work, and the signs are very positive. So, I'm actually confident about the future.
Just finally, Chancellor, you say about going back to work. We're both here in the City of London. It's not as busy as it used to be pre-pandemic. Does it matter to you whether the city comes back physically, whether we all return to the office, or are you fine? Are you happy to see people working remotely for maybe part of the time?
Yeah, well, actually, today we had a slightly different Mansion House audience, and there were lots of young leaders, the next generation of financial services leaders in the audience, and I was speaking to them after the event. And you talk to all of them, they are all super excited to get back into the office on a more full-time basis, because they enjoy the training, the collaboration, the spontaneity, and the mentorship they get from being physically in the offices. And I think it's very important for young people at the start of their careers to have all those benefits. And I hope as we make progress towards our July 19th step and safely take that step, we can get the city humming back to life as we all want to see it.
That was the UK Chancellor of the Exchequer, Rishi Sunak, speaking to our very own Anna Edwards. What a great interview, very comprehensive, really. Mr. Sunak telling us he'll set cities' rules as equivalence stalls. I mean, if you speak to a lot of participants here, it's just very unclear, almost impossible that we'll see some kind of equivalency rule. And I know there are, the same conversations happening in Germany, Matt.
Yeah, absolutely. And we're also seeing, remember, a lot of banks start to really pull the trigger on migration, with JP Morgan, for example, putting its hub in Paris. They want to boost their staff there from, I think, 250 now to 800 by the end of next year. And a lot of the share trading, EU share trading, is now done, the majority of it, on the continent and not in London anymore. So there still remain serious questions about the size of the importance of London. Yeah.
Yeah, and I think 2 days ago it was very telling also that Jamie Dimon was in Paris, but then didn't end up coming to London. And this is some of the rules maybe here to do with also executives traveling and quarantining. Now, Matt, I feel like you should be telling us about the Boston Pops. I'm looking forward to them. It's a spectacular on July the 4th.
I love the Boston Pops, mainly because I love Keith Lockhart so much, and the Boston Symphony Orchestra. July 4th Spectacular won't be in the half shell this time. It's going to be out at Tanglewood in Lenox, Massachusetts. We will, however, live stream it across Bloomberg Television, radio, and the Bloomberg Terminal. Again, Keith Lockhart, legend, is going to lead a live performance of patriotic favorites. It remains to be seen, but they could have Tom Keene singing the Star-Spangled Banner on stage.
Yes.
This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman, London, Matt Miller in Berlin, Katie Lyons in New York. Our very own Tom Keene. He wanted to sing to me. He has not sung to me, but we still get him on to talk about his program, anchor of Bloomberg Surveillance. He joins us now. Tom, I know you have a lot going on. I'm looking forward to your single best chart, but the bottom line is that markets are priced to perfection. So any kind of miss on eco data could actually, lead to some kind of repricing.
Well, okay, that's the gloom side. When you have a first half like we've had, Francine, you really want to talk to smart equity people. Our team set up at July 1, before the holiday. It's 100 degrees in New York, or it feels like it. Let's talk to smart people. Ed Yardeni will join us. We've got Win Thin coming up for Brown Brothers Harriman, and Liz Ann Saunders will join us. It's going to be a wonderful equity view here forward. And the equity view on the chart is simple. Francine, on December 31st, you were deciding which island to go to in the Mediterranean for the summer, in the spring. And what did you do when the S&P was at 1231.20? Well, the game is we got out to 4,300, fine. Joyce Chang at J.P. Morgan reaffirms 4,400 this morning. But the issue is this gaming forward in a bull market is usually people underperforming. It was a wow first half, and here's where we are forward.
Yeah, it is actually pretty incredible. Put that into context. Are you traveling this summer, Tom? Because I feel like if you live in the UK, you're the only, island for the moment that can't really get anywhere without multiple quarantines and PCR tests.
Well, we've heard in interview after interview, Francine, and it's worldwide. It's all about the vaccination rate. Everybody needs to get that second shot. Many people we heard yesterday from Johns Hopkins with the first shot, you know what? They're going to be told to go out and get a second shot. Matt Miller would want a shot of tequila, but that doesn't count, Matt. I'm sorry.
No,
I got to say, in all seriousness, I'm excited to hear what Ed Yardeni has to say, Tom, because not a lot of young people will know that he coined the term bond vigilantes. And where are they right now, especially as the Fed takes a hawkish turn? Why are we looking at 147?
No, we're looking at 147. Ben Laidler this morning, Matt Miller ties the bond market directly in, and it gives them a bullish construction on equities. To all of you, what I would suggest is to July 13, where we've got J.P. Morgan coming out with the first earnings view. Francine, this is an earnings season like I've never seen.
Yeah, I'm looking forward to it. Tom, thank you, co-anchor there of Bloomberg Surveillance, his show starting shortly. Now we'll look at what else we're watching today. And Kaylee, I know you're looking at eco data.
Jobless claims, 8:30 a.m. Eastern time. We're looking for 388,000, but the data has been pretty choppy recently. It was higher than expected last week, so we'll see what the read is today, of course, all ahead of that really important June payrolls report tomorrow, Matt.
You know what I'm looking at? We keep seeing this reverse repo chart climb higher and higher, soaring to all new records. We almost hit $1 trillion in cash yesterday from 90 institutions stored at the Fed overnight. We'll see if it hits that level today.
Yeah, and I'm looking at OPEC Plus meeting today. Now, we'll have plenty more, of course, on the markets. We look at inflation. We go back to that Rishi Sunak interview that our Anna Edwards did with the UK Chancellor. And then, of course, there's a bit of eco tomorrow is a big one, non-farm payrolls. This is Bloomberg.
this global recovery is unfolding, investors need to think more global in their portfolios as well.
There's quite a bit in 2023.
You may even start to see some deflationary forces kind of work their way back into the system.
The Fed now needs to transition and think about risks of higher prices, higher inflation.
The pressure will grow on the Fed to announce QE tapering. I think the debate at the Fed is shifting.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
5-day winning streak coming into Thursday from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures 42.94 on the S&P. We advanced 6 points, TK. We're kicking off Q3.
Well, we're kicking off Q3. We've got jobs and all that. We'll get to that. We've got Joe Livornia coming up as well. But, John, I agree with you. Kicking off the second half of the year is a huge deal. How many people were wrong about earnings strength? Gina Martin-Adams of Bloomberg and many others nailed that. And the fact is, we're all sort of shell-shocked by what we've just seen over 180 days.
So let's frame the forward look, Tom. 4,300 is your median estimate from the strategists that we survey for year-end on the S&P 500. 4,600 the high end. That's Credit Suisse and Jonathan Golub out front with that call. 3,800 the low end at Bank of America. How many upgrades do we start to see in the coming months if this continues?
Just like, John and I never talk, folks. We're barely on speaking terms, but unfortunately the zeitgeist today is dead on. Joyce Chang at J.P. Morgan in the last hour reaffirms 4,400 for J.P. Morgan. And John, I'm sorry, what they're doing in every other shop, just as you say, they're waiting to get the first gloss of earnings and assuming it's the zeitgeist, it's going to be better than expected. They're all going to go, what do you think, John? I don't think of 5,000 on SPX, but they're all going to come up.
They're going to come up to what, Lisa? That slow grind just pushing them higher. That slow mount up, record high after record high.
Yeah, I'm not going to give my quarterly expectation of where we're going to end the year on the S&P. What I will give you, though, is that backing this grind higher in the equity market, we're seeing a grind lower in corporate bond yields. And if you take a look at spreads, the extra yield that you earn over benchmark rates on investment-grade credit dropped to a new post-crisis low of 80 basis points. This, to me, is shocking because it's really almost near record lows.
What? Lisa, translate that for mere
two
mortals.
Things. This symbolizes two things. First of all, there's no concern right now in markets about a default cycle. That's number one. And number two, there is a re-leveraging or perhaps a doubling down on leverage in corporate America. And you can see this from the net issuance, the net buildup in debt climbing to all-time highs. John, how much longer can this push the rally out? Quite a bit.
My favorite line from JP Morgan, we see little value in spreads here, okay, and nothing to push them much wider either. The second part of that sentence, Lisa, is the problem.
Well, that's the whole thing. What's going to cause a sell-off, especially with the Federal Reserve that's shown its willingness to back this market?
It's true. Bottom line, many people think the Fed is there supporting this market, and that's, Tom, one of the reasons why we didn't really see much of a mess
You need worry to go higher, and Lisa just elegantly put it. I'm sorry, John, it's a pendulum of growing debt. OMG, growing debt. The Salesforce issuance the other day, what did we see? Was it Amazon or Apple? I can't remember here, 50 days ago or so. The growing debt out there, OMG, I can't be in the market.
OMG.
I'm worried about debt.
Well, Tom, that's going to shape our tolerance for higher interest rates as well.
Yep.
What can the Fed do in that environment?
Well, what the Fed's going to do is be data dependent, maybe as data dependent as they've ever been. But, John, I have never been more focused on what we're going to see on earnings and earnings guidance from companies. I just can't convey how this earnings season is different.
That kicks off July 13th with JP Morgan. Here's the price action this Thursday morning. 42.92 on S&P 500 futures, advancing almost 1/10% on the S&P. NASDAQ a little softer, lighter, lower, down 12 points on the NASDAQ 100. Yields come up about a basis point to 147.81 on 10s, and euro dollar kicking off Q3 south of 119.
Look at oil.
At least 118.52.
Yeah.
And Tom, just for you, 74.16.
Yeah, I mean, OPEC's in the mix.
I agree.
The Bentley was down today, so I took Kenny in a lift, and, he's complaining about a gallon of gas.
We're calling kennel fee Kenny now.
Yeah, Kenny.
We're getting there. We're getting to oil in just 1 second, because in the day ahead, we should get a sense of what we can expect with respect to supplies coming back online. 8:30 a.m., though, let's get started with 8 a.m. 8:30 a.m. jobless claims, the initial claims of the week. I am very interested to see how much further this falls. The expectation is for 388,000, down from 411,000 last week. Again, the steady climb lower. At what point do we reach a feeling that perhaps the labor market really really is improving more dramatically, sort of drumbeat to tomorrow's non-farm payrolls. Today, also, we're going to be getting the OPEC Plus meeting to consider output boosts. This speaks to your point, Tom. This question of, based on the incredible demand coming back online, will Saudi Arabia allow some of the output production to go back into the market? This has been the argument for the likes of Russia. Saudi Arabia has pushed back. Also today, U.S. auto sales to be released for the month of June. The expectation is for it to decline quite a bit, not because there isn't demand, but simply because the supply is not there. This goes to the chip shortage that we've been talking about, John. If you look at a lot of dealer lots, they're a lot less crowded than they have been in the past, even as you have a growing number of consumers coming in looking for cars.
Lisa, thank you. Let's get our teeth into the second half of 2021. We can go to Win Thin now. Brown Brothers Harriman, Global Head of Currency Strategy. Win, I just want to start with the economic data, where we've been and where you think we're going, and the data that you'll be looking for when that payrolls report comes out tomorrow morning.
First of all, good morning, and thank you for having me. So it's always a pleasure. I think we talk about looking back at at first half and looking forward to the second half, but it's really been a tale of several quarters. The first quarter was the U.S. vaccination rollout. The UK vaccination rollout was miles ahead of everyone else. Dollar was powering ahead. Equities are strong. Interest rates are rising. Q2, we saw a bit of a pushback. The rest of the world were catching up. We had some softness in the U.S. data. Now Q3 starting out, I think we're back to what we saw in Q1, that the U.S. is outperforming in terms of vaccinations, in terms of reopening, in terms of growth. So yes, we had a couple of soft numbers in non-farm payrolls. As you point out, the consensus is I think 7-11 for tomorrow. And I think that the Fed, and I think everyone else has been shocked by how fast the vaccine rollout has come, how fast inflation is rising, and how prolonged that inflation may go. So the Fed is in a very delicate balancing act. We know that they need to see the improvement in the data. I think we're going to get that. There's all sorts of issues in the labor market. It's hard to see any structural changes, but I think the U.S. economy is in really good shape for half two.
When I think very clearly on the Bloomberg terminal this morning that the major country DXY index is doing better than the Bloomberg DXY index. Basically, BBDXY is underperforming DXY. What does that mean for EM in the next half? In the next 180 days, does EM go to sleep as we see strong dollar?
Tom, that's a really the million-dollar question, and I think it goes into what Lisa was talking about earlier about spreads. And to me, EM is in a sense a spread product, right? It's sort of the risk assets. It does well when in periods of abundant liquidity, strong global growth, but it gets a little dicey when the Fed is tightening and the dollar is gaining. So I see sort of a divergence, and we've seen divergence already throughout this year. I think those divergences will continue. Those EM countries that are tightening already will probably get a little cushion. That's Brazil, Russia, several others. Korea's teed up to hike. So is Chile. Mexico already hiked. So I think it just goes back again. I'm going to square the circle. We're seeing, to me, an inflection point in global liquidity. The Fed is going to taper. There's no doubt that they're going to taper possibly by year end. I'm not sure the markets are prepared for that. They've been talking about it, but I really wonder, given where spreads are, given where EM is, if the markets realize that EM is tightening, Bank of England, Bank of Canada have already tapered. So I think there's going to be a little bit of a catch up. I like the EM story in general, but look, for instance, Asia is doing very badly with the vaccine rollout, and Australia's there. They're having really trouble reopening. So again, it's sort of king dollar to me. Everything's at this point going right for the dollar.
So if we're talking about dollar strengthening, the main issue that you're talking about is the divergence in central banks. And yet that hasn't been always the dominant driver of currency in the past, say, 2 years. We've seen also economic growth being a main driver, the recovery trade in terms of which region is entering the biggest and most rapid phase of recovery from the pandemic. Why are we shifting back to a central bank divergence, policy divergence kind of platform that's going to influence currencies?
Well, Lisa, I think the point I would stress that those stories are two sides of the same coin, right? We wouldn't be talking about removing a combination of tapering here in the U.S. unless the U.S. growth story were exceptional. And so, it's to me, it goes back to how we came into this crisis. if you think about it, the countries that came into this crisis strong, that is the U.S., the dollar bloc, Norway, perhaps, they're the central banks. Those are the countries that are coming out the best, and those are the central banks that are really talking about removing accommodation. Those countries that went into the pandemic fighting deflation, that would be the ECB, the Bank of Japan, Swiss National Bank, they were in absolutely no hurry to remove accommodation. They've been fighting deflation for many, many years, and they know that they do not want to move prematurely. So it's in a sense, the economic divergence is driving the central bank divergence. Obviously these factors change, but we are coming out of a period of exceptionally low interest rates, and I think that's why, this inflection point is so important.
Win, thank you for being with us this morning. We appreciate it. Win Thin there, the Brown Brothers Harriman Global Head of Currency Strategy. An opinion piece, an opinion column on Bloomberg Opinion just dropping from the former New York Fed President, Mr. Bill Dudley. He says the Federal Reserve will taper, but TK, don't freak out.
Yeah, I'm speed reading through it. I mean, folks, we get this just like you do off the thing. You'll see it on Bloomberg.com. And I like what he says about his definition of substantial further progress, which is, my goal of getting through the weekend, not in the 100-degree temperature. But Bill Dudley's substantial further progress is out several months. That's important. My
issue, though, Tom, is that he says the Federal Reserve has a plan this time in a way that they didn't in 2013. He goes through it point by point, talking about tapering, 1, 2, actual tapering, 3, raising interest rates, and then the gradual runoff of the balance sheet. The issue I have with that, Lisa, is that, yes, they have a plan. The problem they have is that markets know the plan. And the market will begin to start thinking about the next stage of the sequence and start moving further down the road pretty quickly.
That's actually what I've been giving a lot of thought to, especially with respect to some of the criticism around the mortgage purchases at a time of such elevated valuations in the housing market. How much are they sort of stymied by their own guidance, that once they start, they are in this process and people extrapolate forward, John?
And I'm sure the core of the Federal Reserve are concerned about that too.
They have a plan.
They have a plan, TK. It's good, isn't it?
England has a plan against Ukraine.
They've got a plan too on Saturday. Have you got a plan for how you're going to watch that game?
The Ukraine guy's hurt.
Which one?
I don't know. Somebody on Ukraine's hurt.
Good to know. That's your football update this morning. Bloomberg surveillance. One of the guys is hurt.
One of the guys is hurt.
Value add.
Padres
Tom
won.
Keane, Lisa Broward,
the
Jonathan
Padres
Ferro.
came back and beat the Reds.
Let's not do sport this morning. Let's focus on a market. 42.93 on the S&P. 5 days of gains coming into Thursday. Jobless claims coming at 8:30 Eastern, 6:12 in New York City. Good morning. This is Bloomberg.
With the First One News, I'm Rishka Gupta. A grand jury in Manhattan has handed down criminal charges against the Trump Organization and CFO Alan Weisselberg. The charges will remain sealed until today. They're the first to emerge from a multi-year investigation of the former president's company. Neither Donald Trump nor his sons are expected to be charged. China's President Xi Jinping sounded a defiant tone today in a speech marking the 100th anniversary of the country's Communist Party. Xi called China's quest to gain control of Taiwan a historic mission, and he warned that the country's enemies will break against a, quote, steel Great Wall. The House has passed a Democratic bill to form a committee to investigate the attack on the Capitol. Only 2 Republicans voted in favor of it. The rest of the Republicans are dismissing the investigation as an exercise in partisan politics. And Citigroup's CEO Jane Fraser says that almost all of the bank's employees will return to the office. Still, she says there will be a blended approach that allows for some flexibility. Earlier this week, Citi said that its policies allowing some work from home would give it a competitive edge in recruiting and retaining top staff. Robinhood reportedly plans to set aside as much as 35% of shares in its IPO for individual investors, a bigger percentage than normal. Dow Jones says the stock trading app wants people to sign up to buy the shares on its new IPO platform. Retail investors are largely shut out of IPOs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Good morning, traders. I'm going to place an order to buy euro. The price I'm looking to buy, 118.49. If you're looking to trade euro, here is your chance. You can copy this trade, 118.49 the price. Okay, I'll speak to you later.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
I think it'll be far healthier to start soon and sooner rather than later. Why? Excess risk-taking, excesses in the housing market, and excesses and imbalances in the overall economy. And I do believe if we take our foot off the accelerator gently now, we'll have more flexibility down the road to avoid more abrupt action or severe actions in the future.
That was Robert Kaplan, the Dallas Fed president, catching up with Michael McKee yesterday on Bloomberg TV and radio. From New York City this morning, good morning. Tom Keene, Lisa Abramowitz, Jonathan Farrow. Before I turn to the price action, TK, can we just talk about what counts as a hawk over at the Federal Reserve these days? This is what we're calling the chief hawk. Many people are. It's the Dallas Fed president, and he's talking about taking our foot gently off the accelerator. That tells you a lot about the world we're in right now. This is not the likes of Plosser from Philadelphia, Fisher from Dallas. This is a different world.
It's a really important distinction, John, and I go back to the artwork of John B. Taylor out at Stanford University on the gaps in the range, if you will, around 2%. We haven't discovered the high end of that range in years. And the hawks are practicing being hawks. It's a work in progress.
Do you think Coach Lakota won the argument all those years ago?
I think he won.
Do you think that's fair?
I think the gentleman from the University of Rochester in Minneapolis did very well on that. I mean, it's all 20/20 hindsight. I'm pretty gentle with the inflationistas, and frankly, someone like Paul Krugman, I think, has a respect for the theories that they had, even though he fought with them the whole way. It's not about being right there. It's about looking forward. What are we looking forward to, given the fiscal structure right now? It's totally different.
Let's turn to this price action just briefly, Tom.
Sure.
42.92 on the S&P 500. 5-day winning streak coming into Thursday. Your bond market yields are higher by 147.81. That's the yield right now, up by about a basis point. Euro dollar 118.54. Unchanged on euro dollar as we kick off Q3, Tom.
And remember, it's a jobs day pace here as we go into claims on this Thursday and jobs day tomorrow. Anne-Marie Horton joins us now on The View from Washington. Anne-Marie, the team wants to get to you on infrastructure and the other issues of the moment. I've got to look at the late Donald Rumsfeld. I had a wonderful interview with him, literally on the peeling paint of the north wall of the White House years ago. And all I can associate with Don Rumsfeld, with all his controversy, is the long war. Where's the state of exhaustion in your Washington now to the long war?
Well, incredibly exhausted, Tom, and we're just off the heels of the meeting with the Afghanistan president here with President Biden in Washington, D.C., and they discussed that troop deployment. That is part of President Biden's plan by the end of this year, by September 11th, to have troops, besides low-level presence for diplomats, to exit Afghanistan. This is the longest war in U.S. history. On top of that, besides, first and foremost, the human consequence, also close to $1 trillion on the Afghanistan war. And then, of course, there's Iraq. And as you mentioned, this is the chief criticism of the late Donald Rumsfeld.
And what's so important here, and Stiglitz of Columbia, folks, has been the best I know at counting the beans of this expense of these long wars, is now what for the military coming into 4th of July and a recalibration of what the military does. It seems to be it's going to be front and center for General Austin at Defense to recalibrate what we do.
Yes, certainly, and recalibrate where the troop deployment is, the level of deployment we have and the presence we have, particularly in the Middle East. We also still have a presence, of course, in Iraq. That is one of the main criticisms. Influential career and definitely a controversial career, as many would say, for the former Defense Secretary Donald Rumsfeld. In Iraq, particularly, Tom, really the criticism was about engagement on leaving. What was the plan to leave these countries? And clearly you see the United States has just been dealt there in the Middle East for a number of presidents who have just struggled to get troops out.
The long war overseas, the long war back at home has to do with infrastructure. Every week is Infrastructure Week for the past decade. This time, Infrastructure Week is actually trying to get something done, or that's what we hear. The latest is that the White House is trying to pressure the GOP by talking about how infrastructure, bridges, roads are crumbling. Is the GOP their main concern at this point?
I don't think the GOP at the moment is the main concern in terms of hard infrastructure in the Senate, but I take you to the House yesterday because that's really where the action was, where Speaker Pelosi came out yet again and said that the House will not, she reiterated that really red line in the sand, the House will not vote on the bipartisan hard infrastructure plan until it is also passed in tandem with a multi-trillion-dollar spending human infrastructure, if you will. And really what the House is doing right now is they're communicating on how they would like to see a hard infrastructure bill. Very similar to what we're seeing in the Senate, but definitely a little bit more emphasis when it comes to hard infrastructure on climate policies as well.
Are we getting a sense of the contours of the reconciliation bill that's being drafted alongside the bipartisan act?
It's still very much up in the air, and this is all negotiations verbally. Nothing has been drafted yet, Lisa, and the main sticking point is going to be the price tag. You have the $6 trillion. That is what Senator Bernie Sanders is looking at, but then you have moderate Democrats who are saying that might be just a little bit too high. They are for the increase of taxes to really provide for this human infrastructure and multi-trillion-dollar spending, but not to a level that many of the progressives would want to see.
Anne-Marie, we're touching on a ton of issues here. Let me just finish with one more, if I may. The Trump Organization, very much in the news in the past 24 hours. What are we looking for this morning?
Well, today is the day we are set to get those indictments. We know that they were indicted yesterday, but they are sealed right now, so we're going to get those charges. I think something that many people might be confused about is this is for the Trump Organization and for the CFO of the organization, Alan Weisselberg, excuse me, and the thing to watch out for today, of course, is exactly what these charges are. So those indictments are under seal. We're going to get them today. And the thing with the CFO is he doesn't have a Trump last name, and he's the only person without a Trump last name that is so close to this organization. So we're going to be looking out for those charges. In Washington, D.C., of course, it's important because of just the president's hold on the Republican Party. So this is something that people are really looking forward to see exactly what these charges are.
One to look for a little bit later. Anne-Marie, thank you. Anne-Marie Horden, our Washington correspondent down in Washington, D.C. Your equity market 42.90 on the S&P 500 as we kick off Q3. Futures rolling over just a little bit now, Tom. Unchanged on a session almost.
Day after day after day after day, we go up. And I'm sorry, by the time we get to 2 p.m. and the close, you know what? We got a lift going on. I mean, it's there. It's
that
tangible.
complexion of that grind has shifted, though,
yes,
through the past quarter and coming into Q3. And Lisa, that has been about big tech versus, say, let's pick one sector, the banks, the financials.
Yeah, and if you take a look at the value shares, if you look at the Russell 1000, for example, it's been one of the biggest underperformances over the past few months, going back to 2000. I mean, just to talk about some of the divergences that you're seeing, the idea here going forward, are we going to double down on this recovery kind of phase, or are we shifting into a recognition of a reality that's more disinflationary? And I know that, you know, I'm going to get the pendulum of disinflation, but, you know, here we are, John.
You couldn't help it, could you?
I couldn't help it.
Lisa, just the same script, Q1, Q2, Q3, just waiting for it. It could come in Q3.
It could
come. Yields 147.64, up about a basis point. From New York City this morning. Go on, Tom.
Ukraine is stacked. I think they look really good.
Thank you, Tom. Value add all morning on TV and radio. Don't miss what's still to come.
Good morning,
Really
Kiev.
trying hard to teach
Go to
this.
cash.
This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
If you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
Days of gains coming into Thursday's trading session on the equity market on the S&P 500, 42.89, pushing 42.90 on the S&P 500. 5 days of gains, 5 months of gains, 5 quarters of gains on the S&P 500. We just keep grinding them out. Your Nasdaq this morning down by about 0.2%. Bit of underperformance there, just a little bit. But if you switch up the board, you'll get a flavor, a sense, a picture of the outperformance on the Nasdaq over the last 3 months, over the last quarter, over the last 1 month on the Nasdaq 100 as well. What's driving that? This is what I wanted to finish on. Pick any slice of the curve, 2s, 10s, 5s, 30s. I've gone with 2s, 10s. Let's switch up the board and get there. 2s, 10s over the last 3 months has declined by 28 basis points. You have to go all the way back to January 2015 to see a move like that. January 2015. Early 2015, what were we doing in early 2015? The ECB included sovereigns and its asset purchase program. That's how big the move has been on a 2s, 10s curve over the last 3 months, Tom. A move we have not seen like that really since early 2015. What's driving it? Is it a reflection of what's happening in the equity market too?
Yeah, Riley, stay on that. That chart, folks, is a chart John Farrow and I never, ever thought we'd be talking about 7/1/2021. John, that pullback curve flattening is extraordinary.
Hold on a second. You made fun of me for disinflationary. That's what this suggests.
That's true.
It doesn't suggest the end of the world,
It's
Lisa.
the pendulum of truth.
Just 122 on 2s, 10s.
Carry on.
Don't get excited about the end of the world. Just looking at a move of 28 basis points. Thank you, Lisa.
I think it starts July 13. Again, I'm going to go, John, earnings. Right now to dovetail earnings in, I do want to bring you a headline. We're going to be following this all day. This is the chief financial officer of the Trump Organization. This has been widely anticipated, as reported by the Post last night. The process will begin out of Cyrus Vance's office in New York. This is the first actions. The word indictment is used with the chief financial officer of the Trump Organization, widely expected to touch on the use of taxation and benefits, but you wonder if there'll be a surprise along the way. We'll process this all through the morning, and we believe we see documents this afternoon as well. Right now, we always read the documents from Joseph Livornia with the Taxes CIB, their chief economist of Americas. Joe, what have you tweaked recently? What's the thing you're tweaking here at a mid-year review?
Interestingly enough, Jonathan was talking about 2s, 10s, and you said, why did the curve is flattened so much? I want to just talk about that for a minute, Tom. And
please.
That's been due to the market's expectation of the terminal Fed funds rate coming down significantly. And on your Bloomberg terminal, you can pull up your 5-year OIS, and that's rallied from about 240 basis points, which was the peak in the funds rate in the last cycle, to around 170 basis points. So we've basically had a 70 basis point rally since April, and where the market thinks the terminal rate will end this cycle. And that accounts for the substantial flattening. And yes, you don't have much inflation pressure in the system.
I'm thrilled you went there, Joe. Let's focus on this now. And it's Joseph Livornia of Natixis, Jan Hatzius of Goldman Sachs, and others saying we're going back under 3%. Do you agree with that, Joe, that the terminal value of our economic growth is under 3%, whether it's Feroli's under 2% or Hatzius is under 3%?
It doesn't have to be that way, Tom, but that seems to be the consensus of forecasters. And even in the Biden budget, they're forecasting GDP of 1.9%. So it does seem like the consensus of forecasters is shifting down to a sub 2% world. I would love to see 3%, and it's possible we can get 3%. I'm not a pessimist on long-term productivity growth, and it's very possible that this crisis, this pandemic, was an accelerant to productivity growth, or we're going to find these great new ways of doing business actually long-term could lead to higher productivity. What I can tell you in the short term is the economy is booming this year. It's got a tremendous amount of stimulus. That's the reason why the equity market's up 5 straight quarters. The economy's doing well. Next year it will slow, but where it goes beyond next year, Tom, will be a function, I believe, of regulatory policy and fiscal policy. And if we get the right program in place, I don't see why growth can't be much faster than 2%.
Joe, I want to tease out a couple of scenarios, given what you have just said, and maybe take out the last bit. What's the chance? Can you envision a scenario where the Federal Reserve gets stuck down here?
Oh, absolutely. I've done a few interviews with some other sources saying I believe the Fed is stuck in a box. And I say that because, simply put, if the Fed can't taper the economy when GDP is running at least 7%, maybe 8% this year, how is it going to taper next year when the economy is downshifted massively and inflation's moving lower? They have a real-time inconsistency problem. I don't see them being able to do it. And in the last cycle, it took them 7 years from the last rate cut to the first rate hike. And I believe it was 4 years from the time they began to taper. So they're not going to move anywhere near as quickly as they think they are.
Bill Dudley out with a piece on the Bloomberg terminal this morning on Bloomberg.com, on Bloomberg Opinion, saying the Fed will taper, don't freak out. Joe, do you think it is that easy, that simple, that straightforward?
No, I don't. I don't. The market, I would argue, if you look at the forward market, as I highlighted at the outset, the market does not believe the Fed is going to taper. The problem is the Fed last year bought 45% of all treasuries. They were the single biggest buyer. And their balance sheet is approaching 40% of GDP. Their ability to navigate the taper is significantly more difficult today than it was 8 years ago. So I think to say that they could do it and it's going to be seamless, I think is very, very naive.
Joe, what's the tailwind that the economy is getting at this point from the Fed policy remaining this easy? And I ask this as you talk about the Fed being stuck in a box and possibly not being able to raise rates.
I mean, the policy has basically been I'd argue the economy is pretty healthy in February 2020. We reopened, we got a V-shaped recovery. It was overlaid with tremendous fiscal stimulus. We've had now over $5 trillion of just COVID-related spending. The Fed's been real easy, and you've got this demand boom. Supply has been slow to catch up. That's why you've had the inflation. But the economy is, resurgent. There's just so much pent-up demand. It will moderate, but essentially it's an economy that I would argue if you leave it alone, it'll be fine. But certainly both dials, fiscal and monetary, are full tilt, and that's why the economy is improving. And it was generally healthy. So we're in good shape. I just don't see the Fed being able to do anything on the rate hike side. And if you got fiscal stimulus, it may actually ironically cause them to their ability to do anything that may fall even more. In other words, who's going to be buying all this debt if we get more stimulus from here, which is what the administration is trying to do.
How important is the jobs number that we're going to be getting tomorrow in order to determine Fed policy?
It's important in the sense that if it comes in softer than expected, and we're going to get a soft report sometime soon, it's going to squeeze the shorts in the market. You're going to see 2s, 10s flatten even more. But in terms of the bigger picture, I don't think the employment numbers matter that much. If it's weak, people will say it's because of labor shortages. I don't think it really matters. I think the inflation numbers are what's driving Main Street and what's driving most investment decisions. I don't think it's a problem, but I don't think employment's a big deal at the moment.
Joe, the equity markets, it's Chapter 23 of Mankiw, Chapter 23 of Krugman, Olivier Blanchard, whatever. How do you observe the equity markets in your economics, this run of a great bull market? How does it translate into Livornia economics?
I try not. You mentioned 3 people. One of them I definitely don't try to read. I won't say who that is. But Tom, it seems
shade there, John. Livornia, a little chippy this morning.
A little chippy this morning.
Think what he would say. Think what he would say about Catherine Mann.
Carry on, John.
Never. Very wonderful woman. She actually worked with my old colleague, Peter Hooper. But anyway, leaving that aside, on the equity side, what we've seen really is a tremendous increase in profitability. And that reflects the fact that while the U.S. has recovered, Tom, so has the global economy. I mean, even with the lockdowns, the sporadic lockdowns in Europe and the COVID cases in South America, we've seen the PMIs in Brazil, in the UK, Germany, Italy, France, Japan. They've all recovered. So it's been a huge global rebound. The S&P has significant exposure to the global economy with the U.S. booming. It's really been about earnings. And going forward, you have to assume that this performance is pulling from future activity. But Livornia Economics is, look, if there's no recession in sight, and I don't see one, even if the economy slows, rates stay low, inflation's going to moderate, and we're still going to get positive long-term equity returns, and we still have not seen the peak in stock markets. So I'm still an optimist. Larry Kudlow taught me well.
Joe, final question from me, and I won't go there either. In terms of this cycle, as it starts to really pick up, are you surprised that that hasn't engineered a weaker dollar?
A little bit. To me, there's been a lot of people have been very short rates. They've had curve steepeners on, and they've been very short dollars. So I think that's part of the reason why the dollar hasn't weakened much. And then peripherally, because the U.S. has sort of come out of this pandemic quicker than many of our trading partners in other industrialized countries, it's kept the dollar better bid than it otherwise would be, especially related to these massive twin deficits, the combination of the budget deficit and the trade deficit. So it doesn't totally surprise me.
Joe, it's good to see you. I missed the Kudlow
Thanks,
optimism.
guys and gals. Thank you.
It's great to get a flavour of it from Joe Livornia, Natixis economist of the Americas. Just a little bit of optimism there, Tom, about the future.
Well, it's an optimism on capitalism, and we're going to see it within corporations that can adjust. What I see there, John, it's so important is you have an economist, Joseph Livornia, and you got a market strategist like Anthony Dwyer over at Canaccord Genuity, and literally their language is the same. Where's the recession? Where's the slowdown? Keep on board. And we're hearing that from a lot of other people. I'm thrilled, John, that our team, I mean, I teared up at the team today. What a great second half kickoff with Liz Ann Saunders and Ed Yardeni.
Looking forward to that conversation a little bit later, but that's the bottom line. It's the simple, cheap guide for many people, Lisa. The cheap guide as follows. If you don't see a recession on the horizon, keep buying.
keep buying, and at what point, though, does this create a problem? At what point, and I'm sorry, I know you're going to make fun of me for being
We would never
gloomy,
do that.
but it's fine.
The
I
floor
mean,
is
look,
yours.
I'm okay with it. It's just that the question that I have is, if we don't get, growth exceeding 3%, how sustainable is the debt load that we're putting on? I mean, look, I can bring the gloom, sure. I'm always trying to look around corners.
It's okay.
Okay, she's going to be, John, she's going to be glooming out this weekend, and I'm going to have a case of PBR. We're going to call it the pendulum of PBR. John, do you know what PBR is?
Is that a beer?
It's a beer.
Is that a beer?
Is that a beer?
Is that a beer that
folks,
I don't want to
please,
drink?
out on Twitter, would you please inform
Just confirmation
young
from the
Pharaoh
floor that
of the quality
it is a beer that I thank you.
Pabst Blue Ribbon beer. Al, cancel the Narragansett. We're going Pabst Blue Ribbon.
You're going
beer.
PBR
Can't
beer.
lose the Narragansett. I don't care about Tanglewood.
I give
and
enough
the Boston Pops. PBR
of
only.
a pendulum of gloom, and you will drink PBR.
I think I do a good enough job
PBR.
accommodating the
John.
doom and the gloom on the one side and the I have no idea on the other side. We're going to talk about the pandemic next with Dr. Amber D'Souza, Bloomberg School of Public Health Professor of Epidemiology. Equity futures unchanged, 42.88 on the S&P 500. Record highs coming into Thursday and kicking off Q3. I'll have more than that, Tom. From New York City this morning, good morning. Could be another beautiful one. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. For the first time, a multi-year investigation of Donald Trump's company has resulted in criminal charges. A grand jury in Manhattan has indicted the Trump Organization and CFO, Alan Weisselberg. Weisselberg has served the family for more than 40 years. He has now surrendered to authorities. Neither the former president nor his sons are expected to be charged. A federal judge has blocked Florida's new law penalizing social media companies for barring political candidates. The law was to take effect today. It was signed last month by Republican Governor Ron DeSantis. The judge ruled that the law violates the First Amendment and doesn't apply to all social media providers equally. And here in New York City, Eric Adams saw his lead over Catherine Garcia grow smaller in a corrected vote count for the Democratic primary for mayor. That came a day after the botched release of erroneous ranked choice voting results plunged the count into chaos. The race will likely be decided by a count of 125,000 absentee ballots. Activist investor Elliott Management is stepping up the pressure on GlaxoSmithKline. The firm called into question CEO Emma Walmsley's leadership of the British drug maker. Elliott says Glaxo needs to beef up the pharma expertise in its top ranks before carrying out plans to split into two. Fast fashion retailer H&M returned to profit in the second quarter. Sales rebounded as stores reopened and pandemic-related restrictions were eased. H&M says the third quarter started well and sales are almost back to pre-pandemic levels. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.